Cloudy day. Joke, what's going on? Good day, what's happening? You can try to co-host with another creator to make live more fun and let the viewers know you. Okay, cool. Kiki, how you doing? Edwin, you love penny stocks. Good for you. Have luck with those brothers. I didn't have very much luck with them when I did them. Tried penny stocks many years ago. It just didn't work. Matty boy, what's happening? Cooney, Coonley, Coonel, whatever. A CRB, Sean, what's happening? Dang it, I missed it. Alrighty, be popular, try, blah, blah, blah. Okay, blah, blah, blah. Okay, blah, 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 blah. Okay, just reading what's going on. All right, first and foremost, I think we're live everywhere. Live. Oops, gonna stop this right there. And we are rolling down there. Got that ready. Got that ready. Woohoo! Now, here we go. Good evening, everyone. My name is James. Oh, my hair looks terrible. All right, that's much better. Yes, I'm a little self-conscious. Anyway, Maddie, Cooney, Freddie, Edwin, you have a question. Good, shoot out question. What do you got? Black Dynamite, what's going on? Melinda, how are you? How are you? Andrew, what's going on? What's up? Figma, IPO. Sorry, Starduster, I don't do, what do you call those thingies? Hold on. I don't do IPOs. I only do companies that have been around for at least 2 decades. Hope you're feeling better. Black Dynamite, I am getting there. I have a brewery inside. All it does is keeps producing gas all day long. All right, Intel at 2330. Okay, well, let's take a look at those. IBM. Oh, hold on a second, Eric. Eric and Steve had a couple for us to take a look at. Simone, what's happening? Okay. You have to mirror your video. Yep. Kava, what you think? Dolph, Kava, we'll take a look at it in a little bit. Right now, first and foremost, let the introductions begin. Yay! All right, anyway, beyond the point. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow. Take you along for a ride, peek under the hood, look over my shoulder. I'm not going to say that one. However you want to look at it, okay? What I do is a simple, safe, predictable strategy created for my 9-year-old daughter back in 2008. Now, I don't, what they're calling it gatekeeping. I don't share any secrets. I don't hold anything back. You ask me a question, I will give you an answer. Okay? I'm here simply to share and help educate. That's it. I'm not going to try to sell you anything. We're all adults. We know how this works. I got stuff to sell. You guys can buy it if you want. I'm not going to push anything. There will not be a, what do you call that? A pitch at the end of the night? Nope. There will not be one. Ask whatever questions you want. If you got Little Ethan, subscribe. Cool beans, Little Ethan. Way to go. Thank you. All right. I got puts on Intel. Looks like a tough one right now. All right, Steve, we'll take a look at Intel. Just give me a little bit. As we keep progressing throughout the evening, you will see how things all fold together and how everything comes together. Simple, safe, predictable, consistent 1% is what I'm looking for. If you're new here, dividend investing for weekly cash flow is what I like to do. Car lover. I baked cookies, and I don't know what dough to use. Vanilla dough, chocolate dough, or deal dough. Okay. Interesting, car lover. A little disturbing, but all righty. All right, you know how ambulance and police cars have their names. Yeah, I get that. However, I got 9 channels. 9. You're on YouTube. YouTube is the one channel that I'm not quite sure how to mirror my camera. So unfortunately, you either got to go to a different channel or just deal with it. It's really not that difficult. I can explain everything as it goes along and point out everything. So hopefully it's easy to understand. Little Ethan, hi. All right, let's get started. And let's see what the first one we're going to look at tonight. Your color settings are messing up. Okay, not quite sure what that means. Monitor color is blurry. Monitor color is blurry. Okay. Don't say there. I'm going to have to get the camera's lenses cleaned. Other than that, let's get started. All right, first and foremost, like I said, my name's James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. I invest in dividend stocks for weekly cash flow. Contrast way off. Okay, you're definitely talking to the wrong person. I understand everything you're saying, but you're under the assumption that I understand what's going on with these cameras and in these monitors. Nope, sorry, I don't. I know how to turn it on, and I know how to stand in front, and I know how to talk. That's about it. Okay, my expertise was getting my hands dirty in creating something, not this kind of stuff. Made some money on Saya, good. Bought after it missed the first quarter, sold after the second. Easy money, cool beans, good for you. Bitcoin, yeah, no thank you. I subbed. Ready, Cal, good evening. Good lucks, thank you, Neil. Well, let's keep on going. All right, so first one on the list tonight is going to be over here at SLB, Schlumberger. Let's take a look at Schlumberger. 55, thank you for that. Santander stocks in 1996. I knew someone and wrote it down. The stock spikes, blah, 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 blah. Okay, Andrew, I'm not quite sure. That's not a question. That's more of a statement, but thank you for that. All right, El Crypto Padrino, thank you. Yep, good day. Yep, sorry about that. Yep, if you want to come on over, send me your phone number. I'll give you a buzz, give you the address. You can come on over and set everything up to make it specifically for your viewing pleasure. But if you're asking me to do it, you're asking the wrong person. I don't know anything like that. Where's the hot market headed? Absolutely right. You want to know which way it's going? It's going up and it's going down. That's all it does. It goes up, it goes down. Where some stocks go up, some stocks go down. We have a crash. Yep, even during the crashes, some stocks go up. Even during a boom, some stocks go down. That's all they do. They go up, they go down. That's it. Okay? Dawkins, thank you for that. Not quite sure what you mean by that, but okay. So let's keep on moving. First one on the list today is going to be Schlumberger. It sounds like a weird name, SLB, but it is a dividend king. Now, if you don't understand what a dividend king is, let me briefly explain. What I'm doing here is investing in companies that are consistently profitable. Now, when I say consistently profitable, I mean every single year they make more money over and over and over again. Basically, okay, the stock market has been around for about 400 years. There's over 10,000 different companies we can invest in at any time. Every week we check to see what the number is. Last week, I believe it was 10,138, or was it 10,238? I don't remember, but it was over 10,000. Over 10,000 different companies to choose from. So how do you decide which is right for you? Well, I like a simple strategy. Now, I've been trading for over 20 years. My first five or 10 years weren't that great. It wasn't until 2008, remember that financial crash we had in 2008? Well, my 9-year-old daughter jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" 9-year-old little girl asked, out of all the questions a 9-year-old, no, not "Daddy, can you buy me this dress? Daddy, can we go here? Daddy, can I get a puppy? Daddy, can I get a bunny? Daddy, can I have this? Daddy, No, "Daddy, can you teach me?" Well, how do you teach a 9-year-old how to trade stocks? Well, number one, I had to come up with a set of rules and a set of criteria. How do I do it? Most adults don't understand it. Most adults aren't successful investing. El Crypto, have me come up. I got something interesting that could really help trading stocks. El Crypto, I appreciate the offer. Why don't you drop me a number? I'll give you a buzz and we can chat. See what you got. Now, I've been doing this for a long time. Let me finish continuing. Now, for a 9-year-old little girl to trade stocks successfully, we had to have a couple of rules. Well, here's the problem I had. Number one, she's 9 years old. Number two, I love her dearly. She was not the brightest bulb on the tree. She was average, everyday little girl. Okay? She wasn't below average. She wasn't above average. She was average. Okay? So, that being said, the trading strategy I had to come up with for a 9-year-old, it had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. You like that fifth one? Everybody loves that fifth one, except for the naysayers, because there's always naysayers out there somewhere. Always got to be someone to pee on the parade. Let the air out of the balloon. unplug the fan to the bouncy house. Always someone. But here's the thing. When I say no way for her to lose, well, let me briefly summarize that for you. Okay, just give you some details. Well, the way I look at it, Coca-Cola has been around for 140 years, long before I was born. And I got a sneaky suspicion that when I'm long gone and forgotten, Coca-Cola will still be making Coca-Cola. Pepsi will still be making Pepsi. Okay, Bank of America will still be screwing people out of money. So won't Wells Fargo. So won't, what do you call it, Procter & Gamble. Hess, ExxonMobil, British Petroleum, Occidental Petroleum, Home Depot, Lowe's, Colgate Palmolive. I can go, yeah, see, Colgate Palmolive, on and on and on. Companies that have been in business for over a century. If these are the only companies I'm investing in, well, excuse me, I'm still getting over that illness. For some strange reason, I have a brewery, or a distillery, whatever you want to call it, inside creating all this gas all day long. Been burping, fighting all day. I hate it. It's just part of that sickness. Whoever gets that, it's terrible. That new stomach flu going around, horrible, horrible. Oh, as I was saying, if a company's been 100 years old and consistently profitable for decades, I'm not talking 1 or 2, 3 years. Hey, come up with a new product, they're doing great. No. I'm talking companies that have been doing the same thing for generations. If Coca-Cola is going to be here long after I'm gone and forgotten, well, if she never sells at a loss, there's no possible way she can lose. And I don't care what any of you say. If I buy Coca-Cola, I don't care what the price is, okay? And Coca-Cola continues to make Coca-Cola for the next 140 years. Whichever my descendants inherits those shares, they are going to continue to collect the dividends because Coca-Cola has been paying dividends, increasing dividend, yearly, continuously increasing dividends. Every single year, their dividends get higher and higher and higher. Well, they've been doing it for the last 5 decades, increasing their profits over and over and over again. So what makes me think just because I'm going to buy it, they're going to go bankrupt and go up in smoke? No, they're probably going to be here long after I'm gone. So when I say no risk of her losing, well, I got 5 rules. Now, the 5 rules might help you out a little bit, okay, to understand. Rule number 1. Never, this is from my daughter. So for you, it's going to be a little bit different. But for my 9-year-old daughter, if it's not on the list, don't waste your time looking at it. That's it. If it's not on the list, it's no. Automatic no if it's not on the list. Okay, so let me describe this list just a tiny bit so you might understand it. Out of the over 10,000 stocks that are available, okay, only about 300 meet my criteria. And I have very simple criteria. It's only 2. That's it. 2 criteria, and that is it. Okay, I'm going to get to that in a second, but let's go over the 5 rules. Rule number 1, if it's not on the list, it's a definite no. The list consists of companies such as, ready? Dividend Kings. 5 decades. That's 50 years of increased profits. Dividend Contenders. Oh, wait a minute. Dividend Aristocrats. It was a long weekend. I was sick, so I did nothing all weekend. Absolutely nothing. Laid in bed and watched movies all weekend, just resting. Dividend Aristocrats. Do I want to say a quarter of a century? Do I want to say 25 years? Quarter of a century. I like that. A quarter of a century of increasing their profits. Year after year after year after year for a quarter of a century. Okay? Dividend Aristocrats. Dividend Champions. Again, 25 years of increased profits. Dividend Contenders. 10 to 24 years of increased profits. And then just for the fun of it, we're going to throw in Warren Buffett's list because we like Warren and hey, if it's good enough for Warren, it's good enough for me. So those 5 lists were the ones for my daughter. If it's not on the list, it's an absolute no. I don't care how shiny of an object it is. I don't care what they're saying in the news. If it's not on the list, it's a no. So let's go a little deeper into rule number 1. If it's not on the list, it's a no. If you don't want to hold it for the rest of your life, it's a no. If you don't understand what they do, who they are, and any details about them, it's going to be a no. It's very simple. If you don't want to hold it for the rest of your life, if you don't understand who they are and what they do, and they're not consistently profitable, it's a no. That's just no. Why? Why would you invest in a company that's not continuously profitable? Now, I understand some of you want capital growth. Now, you understand the difference between capital growth and cash flow? Well, if you're looking for capital growth, you're definitely in the wrong place. I'm retired. I have no desire whatsoever to put any of my money into anything and sit and wait for it to go up. Sorry. There's over 10,000 different companies, and there's a whole boatload of them that pay a dividend every 90 days. There's some even pay on a monthly basis. Now, here's the thing. Remember I told you I got 2 criteria? Yeah. You're going to see me doing that all night for the next couple of days until all this is back to normal. Forgot where I was. Don't get old. It ain't as much fun as they make it out to be. Really, it ain't. All right, so rule number 2. Never sell at a loss. Now, if you took care of rule number 1, well, rule number 2 wouldn't even take effect. Because if you bought something that you're willing to hold on to the day you die, well, then yeah, fine, buy it and hold on to it. Now, we're going to get into a little bit deeper, okay, as we progress. Everything's going to come together before the end. It's like a good movie. Everything comes together before the end. All right, so before the night is over, okay, you should be able to understand everything. Drazik, what's happening? You should be able to understand everything. Okay, because I'm going to go through slow, ask as many questions as you want, but do me a favor, only ask the question once. I got 9 different channels to try to keep track of. So all 9 is a little bit challenging. So if you can get right to the question, and make sure it's a question I can understand. Okay, so as I was saying, rule 1, never buy something you don't want to hold on to, or if it's not on the list now. Rule 2, never sell at a loss. It defeats the purpose. Rule 3, make sure the company is consistently profitable. Now, we already talked about that, but it just doesn't make any sense. Why would you invest in a company that's not profitable? Now, I understand some of you want capital growth. You want to buy it and have it shoot to the moon. Yeah, great. Have fun with it. Yeah, you're probably better off doing that somewhere else because that's not what I'm doing here. Rule number 4, weekly options only. I buy dividend stocks and use weekly options against them, doing what is called a covered call. Now, a covered call is one of the safest trading strategies there is. It is so safe, they say, you can do it in your IRA. Yeah, you can. There are certain trades you cannot do in your IRA. Okay? You can't. But covered calls, you can. They're very safe. And they're predictable. And if you do them right, consistent and no way to lose. But we're going to get into that a little bit later. But just sit tight. Take notes. Ask questions. All right? So, as I was saying, rule number 5, make sure all the numbers work. Now, we are going to do some samples, okay? I'm going to actually do some sample trades right in the chart behind me. I'm going to show you exactly what I do, the whole step from A to B to C to D. There's another one. And if you're asking and if you're curious, okay? If you're curious, yeah, I got sick last week. And yeah, it hasn't gone away yet. And yep, I've been drinking this thing like a fine sherry. Between that and the Tums and all the anti-gas crap, now nothing's working. So anyway, let's keep on progressing. I'm just going to try to flush it through the system. That being said, first one we're going to look at today is going to be Schlumberger. So hopefully you will understand everything from beginning to end. And if you didn't know, for those of you that are new here, this right here, that is being recorded live on YouTube. So if at any point you have a question, ask it. It will be recorded. You can go back and watch it over and over and over again. There's literally over 1,000 videos of me doing this exact same thing. Okay, sharing what I know, answering questions, and hopefully you guys will get it. You guys will understand it. Now, like I said, I'm not trying to sell anything. What I'm actually doing is creating a video log, a video diary for my children and my grandchildren. Because I'm not delusional. I know I'm not going to last forever. And I know my children aren't ready for what I do, or my grandchildren. Okay, he's only 5 at the moment. But at some point when I am gone, I would like to pass along my information to my children and my grandchildren. And these videos will be there for them. So they can see what Papa G, that's me, did growing up. Okay? So, believe it or not, someone's stupid enough to make me a grandfather. Who the hell is, talk about irresponsible, okay? I'm a big child. Okay, I really am. I get down on the ground and play and roll around with the kids. My mother just shakes her head. It's like, oh, he never grows up. Why? I'm having fun. Besides, it's my life. Shouldn't I be able to have fun if I want to? But I am responsible. I do pay my bills. I do take care of, I do the adult thing. But I am done being a parent because my children are old enough, they have moved out. So it's just me and my girlfriend now. We can do whatever we want. I just could get her to retire. Damn it. Anyway, so let's move forward. Let's take a look at some stocks. We are going to take a look at, you guys are going to mention stocks to me. I'm going to take a look at them, and I'm going to tell you what the hell are you thinking, and I'll tell you why I say that. Okay? If you're expecting a safe space and me not to hurt your feelings, too bad. Life is not easy, and not everyone is out to make you feel good. I'm just showing you numbers. I'm reading numbers. I don't give advice. I give just a tiny bit of advice. A couple of pieces of advice I'm going to give you. Number one, don't invest any real money until you perfect paper trading. Paper trading is just like Monopoly. Okay, there are a lot of trading accounts, a lot of trading platforms. This is Thinkorswim. It's owned by Charles Schwab. No, I don't get any bonuses. I don't get any kickbacks. I get nothing from them. I just like the trading platform. 15 years ago, I wrote a book, Choosing the Right Trading Platform. I was looking for a certain type of strategy, and the only one who had it out of every single one I looked at, even to this day, nobody has it except for Thinkorswim. Now, Tasty Trade might have it because Tasty Trade was developed by the same guy who developed this. I don't know. I took a look at it. Tasty Trade may be a great trading platform, but it's not as easy as this one. I like simple, I like safe, I like predictable, I like easy, I like less than 10 minutes a week. So anytime you ever hear a video from me, it's always, hey, my name is James, this is Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, it was originally created for my 9-year-old. Remember the story I told you when she was 9 back in 2008? She's, Daddy, what are you doing? Can you teach me? Yeah, 9-year-old. Simple, safe, predictable, consistent in less than 10 minutes. How do you keep the attention of a 9-year-old? It's got to be fun. Okay, so simple, safe, predictable, consistent, less than 10 minutes, 1% a week. That's what I'm looking for. Okay, now for those of you looking for something else, I'm terribly sorry, I'm not going to help you out because I'm not looking for capital appreciation. I'm looking for cash flow. I'm 61, I'm retired, which means when you, I'm going to tell you something. I'm going to tell you a lot of things, but certain things I'm going to tell you to stop, write it down. This is one of them. Write this one down because when you retire, no matter who you are, no matter what you think, you got 2 choices and only 2 choices when you retire. You ready? Choice number 1, give all your money to someone to take care of for you. Awesome plan. Pay someone to take responsibility for your money. Think about it. Number 2, take accountability. Invest your own money. Learn. Do not do it yourself until you perfect paper trading. Go right onto Google. Paper trading platforms. And a whole bunch will show up. Find one. It's monopoly money. Use monopoly money until you perfect it. Because no matter what happens, okay, retirement is coming. Okay, that's like the Grim Reaper. He's tapping you on your shoulder. You know he's there. He's coming. Okay? Whether you like it or not, whether you want to admit it or not. But what you have control over is what you do while you're here. And at some point, okay, you are going to be responsible for making that decision. Do I take care of my own money or do I pass it along to someone else? There's no way around it. Okay, a long time ago, I decided I'm going to do it myself. Because what they were offering, you know, hey, you get a 4% draw. Well, if we do really good, we might get bumped up to 5 or 6% for the year. So the amount of money I have accumulated since I started working since 1973, okay, not as much as you think. However much money you think I have, I don't. But I do have enough to pay my own bills, okay, to take care of my own personal responsibilities. Yeah, I help my kids buy their houses, not my daughter, because I gave her a choice, okay, house or wedding. She hasn't got to that choice yet, but the two boys, I help them out with their houses. Okay, that's what parents do. You should be able to do the same thing for your kids or whatever. But anyway, yeah, you get two choices. Do it yourself, give it to someone else to do. And I can guarantee you, nobody has more interest in your money than you. So, learn, ask questions. Okay? The quality of your questions are going to be directly related to the quality of life that you have. Ask a better question, you're going to get a better answer. A better answer is going to get you a better decision. A better decision gets you a better life. And eventually, you can have everything you want if you ask the right person the right questions. So, that being said, I've done enough of that blah, blah, blah crap. iRod, what's the name of the book you wrote? I wrote 14 books. iRod, 14. All right, now I'm not trying to sell anything, iRod. Everything about me can be easily found online. Okay, I don't hide anything. I've been online since the 90s. I still have the same email address from 1994. I even have emails from 1990s. iRod, you know? Okay. Do you include capital appreciation in your percentage return expectations? Absolutely not, Kevo. Okay? Okay, I'll explain it this way, Kevo. All right? If I have $100,000 in my account, okay, the beginning of the month, what are we looking at? 9, 7, 8, 9, July, August. Okay, so August 1st, which is a couple of days away, if I have $100,000 in my account, 1% a week is $1,000 a week. It's got nothing to do with capital appreciation whatsoever. Nothing. If the stock goes up, great. I'm not counting on capital appreciation. I prefer stocks that just go sideways or up very slowly. You know, those ones, the blue chip stocks that have been around for, 50, 60, 100 years. The ones that do absolutely nothing, give a crappy rate of return for the dividends. Okay, the yield on the dividends are what, 1.5%, 2.5%? Crappy. But here's the thing, that's not what I'm looking for. Okay, what I'm looking for, you'll know it as we come along. Okay, it's called the premium. The premium, it's kind of like an insurance premium, because what we're doing is we're doing stock options along with good quality dividend stocks. They go hand in hand. Okay, number one, I'm never going to buy a stock that's not a good quality stock that has a weekly out. Oh, remember I told you the two criteria I'm looking for? Only two. Number one, consistency of profitability. Is the company consistently profitable? Now, I'm not talking 1, 2, 3, 4, 5 years. No. I am talking 2 decades of consistent profitability. You get a CEO in there that's doing a good job, and he will continue have that company running like a well-oiled machine. 20 years of consistent profitability. That's what I'm looking for. Number 2, weekly options. That's it. 2 criteria. Consistency, profitability, and weekly options. That's it. All right, so let's start looking at some stuff and see what we can come up with this week. Now, I will look at whatever you tell me to take a look at. All right. Now, I do have some rules, and if you go against my rules, I'll let you know. Anyway, so Schlumberger first on the list. Now, Schlumberger is a dividend king. They have increased their profits for more than 5 decades. It is on my list. So what am I looking for? Now, as we progress, you will see everything that I'm looking for. All right? So if you want to write them down, hey, great. First thing I do is make my list. Okay? Dividend kings, dividend aristocrats, dividend champions, blah, 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 blah. Then I take that list and I throw it into the calendar. Now, why do I throw it into the calendar, you may ask? Well, because I am a lazy trader. And remember, the trading strategy I created was for a 9-year-old. So I wasn't... Yeah, thank you, Black Dynamite. Okay, I really hope you don't experience this. It's a stomach flu that's going around. I think I know like 4 or 5 people that caught it already. Horrible. You're okay. Anyway, take all your list of stocks, throw it into a calendar. Now, the reason why we're putting it into a calendar, because the stocks that I'm looking at have consistently increased their profits for more than 2 decades. Then they take and they pay their dividends every 90 days. Well, think about it, every 90 days. Well, there's 4 quarters in the year: January, February, March, first quarter; April, May, June, second quarter; July, August, September, third quarter; October, November, December, fourth quarter. 4 times a year, every 90 days. Each one, these little green dots, they represent companies paying out a dividend. That's why I put them on the calendar. But each one, Hormel, Caterpillar, AbbVie, Abbott Labs, McKesson, Illinois Toolworks, Cardinal Health, so on and so forth. Okay, each one of these companies has increased their dividends for more than 25 consecutive years. But this is just for the month of July. The month of July is the first month of the third quarter. Well, the interesting thing about the first month of the third quarter, it looks the exact same as the first month of the first quarter, which very similar to the first month of the second quarter and the first month of the fourth quarter. They do the exact same thing every 90 days. So take a look. Cardinal Health, the first day of the quarter. First day of every quarter. First day of the first quarter. First day of the second quarter. First day of the third quarter. First day of the fourth quarter. Every 90 days. Now, why do I put it into the calendar? Besides telling me when they have their dividend, which that's what the little green dot is. Okay, there's 4 dates to remember. Okay, closely, listen closely. First date, the announcement date. Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. We made a huge amount of money this year. This is how you're going to get yours. The announcement date. The company tells you how much money they made and how and when you're going to get yours. That's the announcement date, the very first date. The second date is called the EX dividend date. EX dividend date. That's those little green dots. That tells me exactly when the last day the stock trades before the dividend's paid out. So if I wanted to collect the dividend on McKesson, okay, MKC, I have to buy the stock before the 7th. I can buy it on the 30th, the 1st, the 3rd, the 4th, the 5th, whatever, as long as it's before this date. Okay, who good? And then date number 3, the date of record. Whoever owns the stock on the date of record is the person who gets the dividend check. It's that simple. You buy it before the EX date. And then on the date of record, if you own the stock on the date of record, you are entitled to the dividend. Simple. Date number 4. That's the easiest one. That's when you get paid. Cha-ching! Think about it. Just by knowing when they're getting paid, when they're paying their dividend. Well, what does that mean to you? What does it mean to me? Well, not only do I know when they're paying the dividend, what good is that information? Well, here's the thing. Most dividend stocks have a tendency to go up in value. It means the prices get higher just before these dates. So if we know yeah, that's going to happen all night. Yeah, you think it's funny? It's been happening all weekend. Just before these dates, okay, these little green dots, the stock has a tendency to go up in value. So by knowing, number 1, the company's consistently profitable for at least 2 decades, then number 2, we know when they're paying their dividend. And then number 3, we also know that just before they pay the dividend, the stock price goes up in value. Well, that's good information to know. But here's a question I ask everybody, and almost everybody gets it wrong. By knowing when a stock is going to move, what would you do with that information? If you knew a stock was going to go up, what would you do? Mostly everybody says, I'd buy the stock. Okay, nothing wrong with that. There is no right or wrong answer, okay? But there are answers that are more profitable than others. Okay, so remember I'm saying I'm looking for a simple, safe, predictable, consistent 1% per week. Now I'm going to go on and you're going to understand that as we progress forward. So we know when, first of all, we know that these companies are consistently profitable. Great. We know when they're going to pay the dividend. We know if they're paying the dividend, the stock price is going to go up just before the dividend. So now what do? Well, we got to take a look at something else. Next step is to take a look at the charts. Remember I told you rule number 5? Make sure all the numbers work. Well, the first of the numbers we're looking for is the 1-year chart. There's 5 things I'm looking for. Now, it takes me between 2 and 3 seconds to find 5 things in a chart. 2 to 3 seconds for me. It should take you 3 to 4 seconds. Let me show you what I'm looking for. You ready? 5 things. Ready? Here we go. Number 1, the high. Well, that was easy. Number 2, the low. Well, that one is easy too. Number 3, where was it a year ago? Right there. Number 4, where is it now? Right here. Well, those were easy. High, low, is. Number 5, that's the toughest one. What's the direction? Down, sideways, down, sideways. 3 to 4 seconds. That's all it should take you. Quick look. Yep. Great. That's it for the initial look. Because if it's way here at the high of the year, I never buy anything at the high of the year. Okay, because you make your money buying low and selling high, not the other way around. All right, it's not at the high and it's not at the low. It's somewhere in between. Okay, fine, I can live with that. And I took a quick peek at what's going on right here. Because that's a year ago. This is last week. So by looking at this, I can tell, yeah, this is something I want to look at. But that takes 3 to 4 seconds. After we did that, then we want to take a look at these numbers over here. Now let me explain these numbers. This big number here, the biggest number on this page, the biggest one, that was the last traded price on Friday. Okay, so that's where the stock's at this moment in time. Right there, 35.47. Now, I do what's called a covered call. If you don't know what a covered call is, I'm going to simplify it as best I can. Buying a stock and then selling it to someone else under a contract by a certain price, at a certain price by a certain date. So let me briefly explain and everything should come together. You ready? If I'm buying it at 35.47, let's say tomorrow morning I buy this at 35.47 and I sell it to somebody else. Well, I'm going to sell it for the closest strike price. That is the agreed upon contractual price, 35.50, because this is strike prices right here. All the information is right here. Now, if you're on your phone, your iPad, or some type of mobile device and you can't see all these little tiny numbers, that is the main reason why this is live on YouTube. Okay, there's actually 3 live on YouTube at the moment. 3 live channels on YouTube. One is me standing in front. One is just the screen, just the screen with me in the tiny little corner. Okay, but you'll have a better chance of taking a look at little tiny numbers. So if I'm buying it tomorrow morning, 35.47, I want to sell it to someone else. I really don't care who I sell it to. We're going to get to that in a second also. I want to sell it at the closest strike price to someone else for a profit. Well, 35.50 is the closest. Okay? Argue all you want, complain all you want. 35.47, the closest one of these to 35.47 is 35.50. Well, the 35.50 is going for 53 cents. Well, what does that mean? Well, that's the premium. That's the insurance payment. Now, any insurance contract you go into, you need 4 things. Number 1, an agreement, meeting of the minds. I mean, you and I agree on something. That's called meeting of the minds, make an agreement. You're buying it from me at this price by that date. See? 1 August 25, that's this coming Friday. Okay? That $35.50. So that's the contract right there. That's the agreement. Okay, I'm buying it first thing in the morning, 35.47. I'm selling it for 35.50. And then I'm going to collect 53 cents a share. Now, 53 cents a share, if you didn't know, okay, is a little over 1.5%. Well, let's figure out, how do we figure that out? Well, what's 1% of 35.47? 1% of 35.47 is 35. Well, think about it. You take the decimal point, move it over 2 places. 1% of $35 is 35 cents. Isn't that easy? So if 1% is 35, well, 53 is a lot more than 35. So that's more than 1%. So that's a yes, just on, the principles. Okay, so you need 4 things to have a contract to be valid. Number 1 is the agreement. Okay, buying it from a certain price by certain date. Certain price, 35.50, certain date, 1st of August, which is this Friday. Second thing, beginning date. Third thing, ending date. Fourth thing, consideration, money. Money or some type of value has to exchange hands. Okay, it could be a handshake. It could be a slice of pizza. Anything of consideration. Wink and a nod, kiss on the cheek. Anything of consideration makes a contract legal and binding. Anyway, besides the point. So that's what we're doing. Covered calls on dividend stocks. Well, if we know the company's consistently profitable, we know when they're going to have the dividend, and the stock usually goes up in price. Well, right now it's at 35.47, and if I'm buying at 35.47 in the morning, I sell to someone at 35.50, I'm making 3 cents. Plus, I'm making the 53. So I'm walking away with 56 cents on a $35 stock. Well, what the hell does that mean? Let's get the calculator to show you. Now, need my glasses. Don't get old. Getting old is not as great as most people make it sound out to be. Calculator. Okay. So, to find out the rate of return, you find out what your profit is. Okay, in this instance, it's 53. Okay, 0.53. And what is it? What is the investment per share? 35.47. So I divide it by 35.47, and I come to a grand total of 1.49, which is right around 1.5%. Now, if 1% per week is 50% per year, well, what is 1.5% per week? Well, it's a lot more than 50% per year. So what needs to happen? Well, first, tomorrow morning, I got to buy however many shares I can afford, all right, however many. Then I sell to someone else through a covered call the right to buy it from me for basically the exact same price I paid for it. Now, remember why I said I wanted simple, safe, predictable? Do you remember why I said predictable? Well, we're going to do a trade, and I'm going to show you how predictable this can be. Now, remember the consistent part? Simple, safe, predictable, and consistent? Well, August 1st is this Friday. 8 August is next Friday. 15 August, 2 Fridays away. 3 Fridays away. 4 Fridays away. 5 Fridays away. 6 Fridays away. So on and so on and so on. The only stocks I ever do have weekly options, because every single position that I have has a weekly option against it. Because I don't have money coming in magically. I actually have to work for it. Now, I'm retired, okay, so I don't actually punch a time clock anymore. I make a joke with everybody, I work more now than I did when I was working. I'm just not getting paid. Okay, when you're a parent, okay, and you have children and you have grandchildren, so on and so forth, and your mother or your father calls you up and says, hey, can you come over and help mow the lawn? Or I got this limb hanging down, can you come cut it up? Or the fan's not working, can you come replace it? Stuff like that. I'm still working, but I'm not getting paid. Anyway, so that being said, Simple, safe, predictable, consistent, 1% per week. So Schlumberger, let's take a look. Now, we got to this point right here. Let's actually see if Schlumberger is going to fit. Now, the one-year chart looked great. The numbers look great. But now the chart is going to tell me, is tomorrow a good time to buy Schlumberger? Well, by looking at the one-year chart, well, it looks like it, because the high of the year is right around 49. The low of the year is down here around 31. Well, now it's in an upward trend. It's kind of a sideways, but let's go in a little deeper. Because the closer you get to where the action is, which is last week. Now this, year ago. Last week. This is last week. That's a year ago. It gives me an idea where it's heading, but it doesn't tell me where the action is, what's going on. Okay, the front line. I want to go to the front line. Let's see. All right, so the high of the year, 48.81, and that was a year ago. The bottom of the year, right there at the beginning of April. Okay, second week of April, right there, 31.14. That's a big drop. But look at from there. From the beginning of April, up, down, up, down, up, down, up, down. Look at that. It's heading up. It's clear as day here. But this goes all the way back to April. So that's April, May, June, July, now going into August. So that's like 3 months. I want to look at the last 30 days. The last 30 days gives me a better idea. Where do I think it's going to go this week? Because I'm jumping in on Monday, and I want to be on Friday. Because I want weekly cash flow. And the only way I can get weekly cash flow is through something that has something I can sell on a weekly basis. So I got two choices. Something that has weekly options, or sit in front of my computer staring at this all day. Yeah, that doesn't work for me. I did that years ago. I tried day trading years ago. Wasn't my thing. Okay? All right, so let's go down to the last 30 days. We have a better idea of where do we think this thing's going to go. Okay, so exactly a year ago, exactly 30 days ago. Same thing, any chart I look at. High, low, was, is, what's the flow? Down, up, down, up. Okay, here's the 30-day top, the 30-day bottom. What direction is she going now? Look, see, here's the bottom. You get to a point where people say, ooh, Schlumberger at 34? Yeah, I'm going to buy some. And then it goes from 34 all the way up to over 38. Now, from 34 to 38, it doesn't sound like a lot, but that's $4. $4 on a $38 stock is over 10%. Okay, so 10% in 2 weeks, okay, you can do whatever you want, but there are people out there just like me. 10%, I'm taking my profits. What happens when people take profits? The stocks drop. Stock drops to a certain point, okay, people like me say, okay, it's down low enough, I'm going to jump in again. I don't jump in at the bottom. I wait for it to start moving back up. So it hits the bottom. I want 2 days to the upside. 1, 2, there they are. 1, 2, Monday and Tuesday. On the third day, if she's higher, I'll jump in. So I would have jumped in on this thing last Wednesday, which would have been perfect. But I usually don't buy on Wednesday. I usually buy on Mondays and Tuesdays. So yeah, there are a few rules that, I do follow, and sometimes I do miss some trades. Like I missed this one. But this is still a contender for this week, because look at the distance between here and here. Now, it went from 33 to 35. Now, 33 to 35 is only $2.50. That's not, what is that, 8%? Not quite 10%. So does it have a chance to go up at least another 1 or 2% before this profit taken? Yeah. What am I looking for? I'm looking for 1%. I really don't care. So let's take a look at Schlumberger at 35.50 and see what it looks like, and see how it sounds, see how the trades are structured, and see if it's a contender for tomorrow. It's not a tip. It's not advice. I'm just showing you how I progress through, step A, B, C, D, so on and so forth. So now we're at the point where, hey, it looks good. Now let's see what the numbers look like. Okay, we saw these numbers. Well, let's see the actual trade and see if that makes sense. All right, so we're going to get rid of this. We're going to change this here. Okay, where it says spread single, we're going to change that to covered call, because a covered stock, okay, right there, covered stock. And then this thing sets it all up for me. Everything's right there, okay? So here's this price, 35.50 right there. I want to click on that, and it has everything set up for me already right there, that little green line. Now, I have it set up for 10 contracts. I'm going to change it to just one so you don't get scared away by the bigger numbers. Now, I always change when I'm entering into a position. I always change from limit order to a market order. Now, the reason why I do that is plain and simple. I'm going to explain it, and hopefully I only have to explain it once. Opening up at the market on a Monday, most people say that's a terrible time to do it. Well, here's the thing. I'm not everybody. That's number one. Number two, I really don't care what it opens up at. Okay, my concern is the company consistently profitable. Does the company have weekly options? Great. Well, here's the thing about jumping in at the market first thing Monday morning. Well, first thing Monday morning, I'm going to buy 100 shares, see? Okay, let's change it so it says right there. Here's the order. Buy one covered call, SLB, that's Schlumberger, 100, that's the weeklies. It says 1 August 25. Well, that means this trade here, this option that I'm selling tomorrow morning, is going to expire Friday afternoon at 3:59. Because at 4 p.m., you can't do anything. The $35.50 call option against the stock at the market to open to open. Now, what does that mean, to open to open? It means I'm doing 2 trades at once. I'm buying the stock and selling the option. I buy the stock, that order gets sent off to New York. I'm selling the option, that order gets sent off to Chicago. 2 orders to open to open. Now, the reason why I do it at the market to open first thing in the morning, because as soon as the market opens at 9:30, well, guess what? By 9:31, I will have bought the stock and I will have sold my option. And the numbers are already linked together. The stock and the option are already linked together. So remember where I said simple, safe, predictable? Here we go, predictable. I already know what my profit's going to be before I even do it. So for those of you who say, oh, I know the stock's going to move, I'm going to buy the stock. Well, where's your profit? Now you have to wait for the stock to go up before you make any money. But me, the stock doesn't have to do anything. Nothing at all. It could stay exactly where it is and I'm still making money. Let me explain. Okay. I'm buying the stock at the current price. I'm selling it at $35.50. We already figured that one out. I'm making $41.50 per contract. I know it doesn't sound like a lot, but that's per contract. One contract, $31. 1,000 contracts, $31,000. See what I mean? Okay, so it's all a numbers thing. Whatever you can afford, because we're all on a different path. We all have different numbers to work with. I'm just showing you one. So you figure out, well, I have X amount of dollars. I can buy 15 of these. Good, buy 15. Okay? Now, I already know what my profit is before I even enter the trade. So if the stock goes up, I make my money. Stock stays the exact same, I make my money. Stock goes down, I still make my money. I still make my 1.5%. Because that's already locked in. Stock could do anything, and I've already made my money. Well, I really don't care because it is a consistently profitable company. They increase their profits every year. The dividend is right around the corner. Okay, remember, I like to buy it before the dividend, and the stock price goes up just before the dividend. Well, where's it now? Well, right now it's at $35.47. Well, I'm buying it at $35.47, and I'm selling it $35.50. That's 3 pennies away. I've got 5 days for this thing to go up 3 pennies. If it does, great. I get all my money back. I get to keep this profit, and then I get to choose another stock next week. But if the stock goes down, and they do, if you think just because you're buying it, it's not going to go down, you're sadly mistaken. That's all they do. They go up, they go down, they go up, they go down. That's it. And then they go up and they go down. They go up and they go down. That's it. That's all. Okay, so if I know what my profit is, the stock doesn't have to do absolutely anything, okay? And I'm going to hold on to it until the day I die or till it hits my target. See, I can do a covered call every single week on a stock just like this. Now, let's see, wait a second. Before we go any further, let's find out what the actual ROI is on this. Because here's the profit. Maximum profit, $41.50. Cost of trade, including commissions and fees, $3,509. So let's find out exactly what the rate of return is for 1 week. And then I'm going to give you a nifty little equation, a metaphor. Metaphors are awesome. It allows you to see something that you previously couldn't see by viewing it through a different mirror or a different spyglass, whatever. Okay, so get the calculator. Okay, maximum profit, 41.50. Put it into our calculator. 41.50. We're going to divide that by the cost of the trade, including commissions and fees, 35.09, and that's going to be the rate of return for this week. Then I want to explain something to you and see if this makes sense. 35.09 equals grand total of 1.18. Ugh, I like it better the other way. But 1.18%, well, that's over 50% per year. Well, great. Here's my little analogy, if you want to think of it this way. So if you like Schlumberger, there you go, 1.18. Let's get rid of that. Let's get rid of this. Let's get rid of that. Let's bring this back to there. There we go. Now, I'll give you an interesting way of looking at it. Okay, now remember we told you 1.1% for Schlumberger for this week. Well, think of it this way. If you're thinking of investing in the stock market, well, what kind of thoughts do you have about the stock market? Are they positive or are they negative? Well, the way I like to look at it is I'm like building cash producing assets. Now, we all know what a cash producing asset is: something that you buy, something you create, or something you inherit that gives you a rate of return. Well, I'm looking for weekly cash flow. So I'm looking for an asset in which I can get a weekly return from. So think of it this way. Let's say, hypothetically, SLB is a soda machine, a Coca-Cola machine, Pepsi machine, Snapple, whatever other ones there are. A soda machine. How much does a soda machine cost? Well, this soda machine is costing me $3,500. $3,500 for this soda machine. Well, guess what? This soda machine is giving me $40 a week. Well, that's 1.1%, or 50% per year, every week. So what do I have to do? Well, I gotta keep my eye on my soda machine. I have to maintain it. Well, how do I maintain it? Well, you look at it every day. What's it at now? Well, there's certain things that never change. One thing's that never going to change. The clock is ticking. That's never going to change. Okay? Retirement is coming. That's never going to change. But what also doesn't change is the price that I paid for the stock. Now, if I'm buying it at $35.47, from tomorrow morning until the day I die, my purchase price for Schlumberger is going to be $35.47. From now until eternity, my purchase price for Schlumberger is $35.47. What's going to happen to it in 5 or 10 years? It's either going to go up or it's going to go down. Who knows? Well, they've been around for long enough to have 5 decades of increased profits. So do you think in 4, 5, 10, 15 years it might hit $35.50? Because remember, my target price is $35.50. So if I buy it tomorrow morning, I'm going to sell the $35.50 this week. And if I don't hit my target, guess what? Look at this. Next week, 8 August 2025. That's next Friday. The $35.50. Right there, 79 cents a share. Well, that's almost 2%. And guess what? If I don't sell it then, look, here's another one, and another one, and another one, and another one, every 7 days. So this soda machine, $3,500, this week is giving me 1.1%. Next week, now this number will change, okay? The value, it goes up and down every week. Every day it goes up and down. As a matter of fact, all these numbers here, 9:30 tomorrow morning, all these numbers are going to change. And every 2 or 3 seconds, they're going to change. And then they're going to change, and they're going to change right up until 4 p.m. And then they're going to stop. And then they'll start over again at 9:30. 9:30 to 4 p.m. every single trading day. Now, there's 266 trading days a year, about 66 trading days per quarter, 13 trading weeks per quarter. 13. trading weeks per quarter. So we just went from 10,000 down to 13. Well, 13 weeks in a quarter, that's 3 months. So if I have about 300, remember I said 300 stocks, about, okay, give or take, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, about 300 different companies. Well, you take those 300 different companies and you put into a calendar. There's only 66 trading days in a quarter. 66 trading days in a quarter. So if there's only 66 trading days in a quarter, and I have 300 stocks that are consistently profitable for more than 2 decades, it's going to be at least 5 per day. At least 5 per day. That's about 15 to 20 companies every single week to look at. Now, I don't buy 15 to 20 stocks every week. I only buy like 3 or 4. Okay, I'll buy 1 and then I'll sell 1. I'll buy 2, sell 3, buy 4, sell 5, buy 1, buy 6. It changes every single week because all stocks do. They go up, they go down, they go up, they go down. So Schlumberger's on the list, 1.1%. Great. Yeah. Let's go on to take some questions and we're going to look into the next one. All right. More questions. Here we go. What's up? Not much. All right. Terrell, good evening. Gee, most amount of money you won. The most amount of money I won, I would say like $26,000 in a day. The most I lost is about $91,000 in a week. That was uncomfortable. The wife didn't talk to me who knows when. Wednesday until when? Kevo, I'm terribly sorry. I don't know specifically what you mean by Wednesday. Sorry. I got so many conversations going on. Flip and fix. Which stock we talking about right now? Schlumberger, SLB. Kevo, you don't wait for a specific price on Monday morning. Just execute immediately? Absolutely. Okay, Kevo, you're going to get to a certain point in life. Seriously. Okay, all of you. You are going to get to, I got to fix this. Hold on. It wants me to prove I'm human. There you go. Drag the puzzle piece to fix the puzzle. Okay. You're going to get to a certain point. You might not be there. Some of you may be there. Okay? Oh, there's a quote from Conan the Barbarian. There comes a time in every man's life where diamonds lose their luster. Rubies refuse to shine. Okay? There is a point in your life where the pursuit of money and power changes, stops. And you focus on other things. Time with family, time with loved ones. Is it not safer to wait after the first hour to see direction? Ava, you know, that is an excellent point. It really is. Sometimes it is, sometimes it isn't. I don't. Okay, now, I've been playing this game long enough. When I see 2 days to the upside, okay? As the market opens, first thing in the morning, 9:30, the very first ticker symbol. If it's higher, I'm jumping. If it's lower, I'll sit and wait. But for the most part, I just jump in because the stock and the option are already tied together. My concern is not really the stock price itself. My concern is the consistency of the profitability in which the company has. They're coming off of a 30-day high. Remember I told you that? Let's go back to that chart for a second. Okay, you can argue all you want, okay? It's coming off of a 30-day high. A 30-day high, people like me and some of you are going to take profits. Well, what happens? You take profits and the stock drops. It gets to a certain point. This is the point that I like. 2 days to the upside, there and there. The very next day, I want to jump in. Okay, if I jump in, okay, I already know what the stock is going to be, the stock price, right, rough idea. I already know what the option is going to be, and I already know, am I into a profit? Scotty Young wants to take a look at Baxter. Scotty, you got to sit and chill for a minute. I got a couple over here we're going to take a look at first. Okay, but I hope that answered your question, Ava. The man, hey, I'm a kid. I want to start. You got to be at least 18. Okay, I can't really talk to you until you're at least 18. Greetings from Portugal. Bruno, how are you doing? Hope you are better. I'm getting better, Bruno. Okay. Chase and Jack. With this new trade deal with Europe Union, the market should be pretty good tomorrow, I hope. Well, me too. Boom and busk. I see it coming. Okay, whatever. Patrick said hi. I like to hold 5. Okay, thank you, Andrew. My chief rabbi. Okay. Okay, Bruno, you know EQIX. We looked at that before. That's a big fat no. Can I get mod? What the heck is mod, Conrad? Do I do crypto? No, I do not do crypto. Sorry. Do you make trades live, Chris? Yes, I do. I have a morning trading group. It is a paid service, and no, I'm not going to try to sell you anything. Okay? I give you my word. I'm not going to try to sell anyone anything. Chris, if you're interested, you know where the bio is. You know how to do all that kind of stuff. We're all adults here. Okay, so you can argue all you want. 30-day bottom, 30-day top. New bottom, now she's going back up. It will continue to go back up until it is done going up. How far is that? Well, it all depends on who's playing the game. Okay, investors, well, they like it to go up at least 8 to 10% before they start taking profits. Well, right now we're probably around 7 or 8. But we can go all the way up to $38 because right now we're at 35. Okay, the previous bond's at 33.50. Well, we're right now at 33. Okay, so it's only $2.50. Not that much. Okay, not like a 10%. So take a look at where it is. Take a look at where it's going. Okay, what are the odds and probabilities? Well, if the dividend is coming up, they have a tendency to go up just before the dividend date. Okay, if it is looking like this, well, that's a hell yeah for me. That's for me, though. I can't tell you to do what you do. You have to make your own decision on what's right for you. I'm just showing you what I do. Now, these are my rules. Okay, they're James's rules. That's it. They hold no weight whatsoever. Okay, you've got to figure out what makes sense to you. And as a matter of fact, that's the question I'm going to end up tonight with. Number one, does it make sense? Because it either makes sense or it doesn't. Okay, so let's keep on going. That's Schlumberger. Let's take a look at something else. Andrew, if they've been going for 40 years, they have been learning from their mistakes. It makes a successful dividend. Absolutely, Andrew, I agree with you. That's 0.25 of a century. Yeah, a quarter of a century is 25 years. True. All right. It's all good. Good evening. Thoughts on crypto, Hunter? I don't do crypto. I nearly hit a. Is the other YouTube channel on? Yes, Jason, it is. Should I short Carvana? Can't tell you that one. Hello from India. Namaste. Get a practice account, folks. Absolutely, Andrew. I'm going to agree with you. Practice? You talking about practice, man? Stu, not the game. Practice. Yeah. Well, Stu, I hate to be the bearer of bad news, but the greatest basketball player of all time is Michael Jordan. He'd show up early for every game and practice. He'd show up early at practice and practice. Larry Bird, same thing. He'd show up early to a game just to get out on the court and practice before the game started. And every once in a while, if he didn't do well, he stayed after the game and practiced some more. Terribly sorry if you don't agree with the practicing part. Okay, I've been trading for over 20 years. I still have a paper trading account. I still consistently paper trade. Okay? Because as a beginner, as a trader, you're going to lose most of your money by doing the stupidest thing you can possibly imagine. And probably some of you are thinking, yeah, I ain't going to do that. I laugh at you now because the simplest, easiest, stupidest mistake where you're going to lose your money is you're going to hit the wrong button. One of these days, you are. You're going to sell instead of buy. You're going to buy instead of sell. You're going to do the limit instead of a market. You're going to do market instead of one of these days. Everyone does it. I don't care how good you are. Everyone hits the wrong button at some point. My advice, now I only give advice on a few simple things. My advice is if you hit the wrong button, okay, as fast as you can humanly possibly do it, call your broker. Seriously, if you make a mistake and you catch it immediately, call your broker. If you can call your broker within 30 seconds, and 30 seconds is a long time if you think about it. Hit the wrong button, oh, damn it, pick up your phone, call your broker. Because every time you call your broker, it's time-stamped. And then you have a conversation with them. Hey, I hit the wrong button. Now, 30 seconds to a minute, they might let slide. 4 or 5 minutes later, ain't happening. Sorry. So, that being said, Vincent, good evening, Vincent. Vincent's here. We can get started because Vincent's here. All right, so let's keep on going. Practice makes perfect. Thank you, Andrew. Intel. Yep, Intel's on the list, Don. I want to take a look at that. Stu, I know what an IPO is, okay? I'm a lot smarter than you think. Want to start a position in Kava, but as it is real recent listing, don't think he'll be interested. I'm not interested at all. Use Realdo. Well, Stu, I have 7 accounts. One of them is a paper trading account. The rest of them are all real. I use the paper trading account for new trading strategies. Okay? Bro, why I care? Do, no dough. Okay, whatever, Greasy, whatever. I got 9 channels, but Twitch ain't one. Well, actually, Twitch is one. I just get no response from Twitch. Schlumberger and Trees, good evening. Buy the option. I don't buy the option. Sorry, Hugh. 80% of all options expire worthless. Okay, one thing I don't do is I don't do politics and I don't do religion. What about daily trade? I don't daily trade, sorry. Do you read this? Boo to you. No, I do not read this. Do you know any strategy to find the bottom of the market? Absolutely. We only short though. Good for you. Daily candle, RSI. Good for you. What is your favorite dream? Yeah, my God. You mentioned the dividend is only 4Q a year. Is it through the rest of the year doing weeklies, just collecting covered call premiums? Well, Andrew, think about it this way. Almost every dividend stocks, they have different, they're all different, okay? Now, some pay once a year, some pay twice a year. Almost all of them pay 4 times a year. And there are a few that pay once a month. So you get a few that pay once a month, a few that pay once a year, and a few that pay twice a year. But for the rest of them, it's always every 90 days. What?
Hey, James, do you mind looking at Merck?
Merck? Yeah. Let's take a look at Merck. Let's take a look at Merck, MRK. And I just to let you know, I do have some Merck. First thing is always high, low, where was it? Where is it? Look at the motion. Down, up, down, sideways, down, sideways. Now it's going up. Ooh, nice. A little queasy there, but we'll get to that one in a second. So Merck, let's move this over so we can read these numbers better. Just move it on over. I want you slide it on over. Move over, cool down. 84.71. The closest is going to be the 85. The 85 is going for 203. Now, 203 on an $85 stock is well over 2%. Now, if 1% a week is 50% a year, 2% a week is over 100% a year. Can you imagine doubling your money every year on something so simple that takes less than 10 minutes a day? Think about it. Less than 10 minutes a day, 5 days a week, because there's 5 trading days. That's less than an hour a week. Less than an hour a week to make 1%. Now, depending on the size of your account, if you got 50 grand, 1 hour of your time will be $500. If you got 25 grand, 1 hour of your time will be $250. But if you have 100 grand, 1 hour of your time is worth over $1,000. So it's all in context. So the numbers look good. The chart looks okay. Let's dive in a little bit deeper to find out exactly what this chart is telling me. All right, here we go. The high of the year was a year ago. The low of the year was back in May. All right, well, let's take a look. The high of the year, a year ago, 127.99. Let's call it 128. The bottom of the year, right here, take a look at that. Double bottom at 73.28. Right there in the middle of May. Okay, she went up, down, up, down, up. See, I got a little bit of a problem with Merck because it's at the 30-day high. And I don't like buying at a 30-day high.
Like a 90-day high.
Yeah, well, okay, up, down, up. So it went from 79 to 85. So 79 to 85, that's $6. Well, $6 on an $80 stock, that's only like 8%. It could go up more, could, but then you're really going to have to decide whether or not that's okay for you. Me, I'm going to pass on it because it's a little too close for me. Now, some of you may take that, but let me explain something to you that you might understand why I'm not going to do it. Okay, I'm 61. I don't work anymore, so my money has to come from my investments. Okay, 1% a week. I'm okay with that. Perfectly okay with that. I live a comfortable life. Don't worry about me. But here's the thing. I don't have the luxury of being wrong. Because if I lose, I'm going to find myself, welcome to Walmart. Enjoy your shopping. Oh, let me get that cart for you, miss. Would you like paper or plastic? Yeah, that ain't going to happen. Terribly sorry. I have plenty to do. I don't need to bring in extra money. Welcome to Walmart. Have a nice day. Here we're looking at a seasonality chart. All the way to the left, January 1st, all the way to the right, December 31st. This basically gives me an idea of what the stock normally does. Normally does. Well, the blue line represents the movement this year. Okay, we're already halfway by. Okay, half the year's already gone. The red line represents 10 years of average movement. That's 1 year. That's 2015, 2016, 2017, 2018, 2009, all piled on top of one another to give me an average movement. Well, it's the average movement right here. Okay? Down, up, sideways. Okay, so where are we now? We're right here. That little blue dot. That was Friday. This is where we are. So let's zoom into that, get an idea. What does she normally do right about now? Well, now see, that does not give me any warm fuzzies because we're here. It looks like she's going to go sideways for about half a week and then drop before jumping back up again. Now, if you take a look at the regular chart, okay, 30-day bottom, 30-day top, pullback, retracement, okay. Does it look like it's going to come back down again? Hypothetically, it does, because that's what it does. Down, up, now it should come back down again. The seasonality chart shows me that it's getting ready to come back down again. So this is not something that I would do based on the free information that is free online. Now, don't get me wrong. I like Merck. I actually already own some. Okay? So would I be jumping into buying some more? Not at this moment in time. Because, see, it's already up to the high of the 30-day period. And as I told you before, I don't buy at a 30-day high. Sorry. But other than that, I like Merck. Okay, so let's get back to where we were. Halliburton's next. Oh, I do own some Halliburton. Oops. Okay, remember? High, low, was, is. Look at this. Down, sideways, up. That's it. Down, sideways, up. That's the motion. Sorry, high, low, was, is, down, sideways, up. 22.45, come on. 22.45, we know. 22.50 is going to be the closest, right there. 22.50, 41 cents, just shy of 2%. If you can't figure out 2%, it's not that difficult. Current price, 22.45. You take the decimal point, move it over. 1% of $22 is 22 cents. It's offering 41. Not quite 2%, but close. All right. Getting old, you really start falling apart. I'm eating Tums like candy. Not helping, but still. All right, so here's where we are. This is what's going on. Let's zoom into this, see what that looks like. Is that going to be a yes? Is that going to be a no? No. I already have some Halliburton. But for those of you who might like it, well, let's take a look. Holy cow, I got 99 questions. A year ago, 3501. Bottom of the year, second week in April, 1872. High, low, was, is, look at the motion. Up. That was easy, right? Up. Okay. Up, down, up, down, up, down, up, down, up. Okay, so it's basically going to the upside. Fine. Last 30 days. Because even though this looks good, the last 90 days, that's the last 3 months. Well, I want to look at the last 30 days because I want a better idea. Where do I think it's going to be by this coming Friday? I want to be in, I want to be out in 5 days. Because I want my 1% this week. Well, let's see if I'm going to get it. Here we go. High, low, low. Where was it? Where is it? Look at the motion. Down, up, down, up. Now, is Friday slowing down or is that just an anomaly? That, because here's your bottom right here. See, here's your 30-day top. Here's your pullback. Turn around 2 days to the upside. 1, 2 is the third day right there. Okay, so tomorrow, if tomorrow she's higher than the close here, then it will be a yes. That'll be jumping in. But what does it look like? Well, we already seen the numbers. So let's take a look at what it sounds like. So let's get rid of this. Let's change this right to there. 2250 right there. One contract right there. At the market right there. Confirm and send. Buy one. Covered call. Halliburton. HAL 100s. That's the weeklies. 1 August 25. That means the option expires this coming Friday. 2250. Call option. Halliburton. At the market to open to open. Now, I'm buying it at 2245. I'm selling it at 2250. How long is it going to take Halliburton to get to 2250? I really don't care. They're consistently profitable and they have weekly options. Okay? Meaning they have 5 decades, or do they have 4 decades? 3 decades? I forget. But anyway, they are on my list. But they consistently increase their profits year after year after year. I really don't care what price I get in at, as long as I'm getting 1% every single week. All right, so I'm making 38 bucks, and this cost me 2200. So let's do this. Calculator. 38 bucks divided by 2212 comes to a grand total of 1.7. Okay, so it's 1.7% for 1 week. So you got a couple of questions to ask yourself. And question number 1 is, does it make sense? Seriously, why would you buy anything if it doesn't make sense? Do you know who Halliburton is? Do you know what they do? Do you know how consistently they've been profitable? Okay, does it look as if it's going to stay the same or go higher between now and Friday? Couple of questions. Number 1, does it make sense? Number 2, do I like Halliburton? Number 3, do I like Halliburton at this price? Number 4, am I willing to buy it, hold on to it, never sell it at a loss, and continuously get weekly cash flow every single week until the day I die or it hits my target? My target is 2250. It's at 2245. That's only 5 cents away. Can it go up 5 cents between now and the day I die? I hope so. Think about it. Next. Eric wants to take a look at IBM. Oh, I do have IBM. I get 7 accounts. Sometimes it's hard to remember all the ones that I have. Oh, shit. IBM. Chase and Jack, have we done Alcoa, APLD, and Coles? Not yet. Oh, wow. I missed all these questions. Hold on. All right. All right. I'm going to American lefty. Should I invest in an indigestion? Yeah, that's funny. That is funny. All right. Hey, it's Hollywood. All right, I have to go back to the beginning because I missed all these questions, and I hate missing questions. Philip Johnson, Enron. Oh my God, why would you bring that up? Okay, so any IBM. Ooh, now some of you might be cringing when you see this chart. Look at this. Okay, quick, high, low. Where was it? Where is it? What's the motion? Up, down, up, down, up, down. Big drop. I love a big drop like that. Now, the reason why I love a big drop like that is because gaps have a tendency to fill. Big gap here, look, filled. Gap here, filled. Gap here, filled. Gap here, filled. Okay, this gap, that's going to fill eventually. You know what that means? Eventually, this is going to go up. Look at another gap right there. Okay, let's zoom into that one, see if you can see that one. Okay. Big drop here, then stock went back up, filled the gap. Another gap here, filled the gap. Gaps have a tendency to fill. Okay, so where are we? Let's look at the last 30 days. Oh, here we go. Check it out. 30-day high, 30-day low. Okay. 1 day to the upside. Look at the big drop, look at the volume increase. What happened here? Well, more than likely that had something to do with earnings. Now, I don't pay attention to earnings at all because I've seen positive earnings where stocks drop. I've seen negative earnings where stocks go up. So I don't really pay too much attention. Yeah, baby, in the house. What's happening? Yeah, baby. So stocks go up, stocks go down. When it drops like this, most people run in high. No, not me, because I want 2 days to the upside. Well, we had one yesterday, Friday. Well, if tomorrow's an up day, then I might be jumping in on Tuesday because I love the idea of this thing going up. This is IBM we're talking about. This is not Sally's Pizzas or Joe's Shiny Shoes. Okay, this is IBM, International Business Machines. Okay, they've been around for, I think, the 1960s. Okay, they're almost as old as I am. So I love that right there. Now, it's not an opportunity at this moment because I like 2 days to the upside. So far, we've only had one. But with a big drop like that, yeah, there are going to be bargain hunters jumping in to grab that. Let's keep on going. All right, so 239 or 259, sorry. Let's get that out of there. So let's take a look at 259 if you like IBM at 259. So the 260 is the closest one. Right there. One contract at the market. Buy one covered call IBM. 100, that's the weeklies. 1 August 25, that's this coming Friday. 260 call option IBM at the market to open to open. Well, right now it's at 259.72. Okay, 259.72. We're talking about IBM. You see that big drop, you think that's not going to fill? Well, here's the thing is, while we're waiting for it to go back up again, because they usually always do, especially after a gap like that and a pullback like that. Okay, it's IBM we're talking about. So I want 260. Well, if I'm buying it at 259.72 and I'm selling somebody the right to buy it from me at 260, well, that's crappy. I'm making $178 per contract and I'm investing $25,000. Well, let's see what that numbers look like. That doesn't sound very good. Okay, let's clear that. 178 and 50 cents. I'm going to divide that by $25,000 per contract. 0.69. So guess what? 0.69? Yep, no thank you. I'm not going to do it because the numbers don't work. Now, I love the idea because take a look. You cannot argue the fact. All right, get rid of there. Get rid of this. Get back to there and get back to here. Okay, you cannot argue it. Facts are facts and you can't argue them. Here's the high, here's the low. Big, huge gap here. The volume more than quadrupled. So yeah, this thing is going to bounce and slowly going to go back up again. But it's not it's not offering me enough money. So I'm not going to do it. I have no desire to buy and try to get 1% when it's not offering me 1%. Sorry. I love IBM. Now, I probably will take a look at it tomorrow morning to see what it opens up and see how these numbers change. If they change in my favor, then yeah, I might do them. As a matter of fact, I already own some IBM. I'll probably end up buying them just to do a little bit of dollar cost averaging because I don't really remember exactly what I have IBM at. I don't know. I try not to clutter my mind with trivial stuff that's already written down somewhere. Okay? Think about it. Why put in your head information that's written down somewhere? Well, it's written down for a reason, so I can clear my mind to think of other things. Okay. No to IBM. All right. You own IBM at 185. Ouch. What? 185? Well, if you own IBM at 185, it's at 259 now. You own Dow. Okay, let's take a look at Dow. Now, I do own some Dow also. Oh, shit. Dow did the same thing. High, low, where was it? Where is it? Look at the motion. Sideways, down, sideways, down. 2550. The 2550s are going for 64. Well, 64 for a $25 stock is more than 2%. Okay, 2% a week is more than 100% per year. So let's take a look at the numbers. Okay, a year ago, Dow's at 5270. The high of the year, 5581. Now, this is something I need to point out to everyone. Okay? Okay, yeah, baby says that IBM is already at 262 pre-market on Robinhood. Because they do trade pre-market. They do trade, 24 hours. IBM does. So Dow, all right. I own some Dow. Where was I going with that question? 2551. Oh, this is what I point out. If you buy a stock and you're concerned with it going down, you shouldn't be playing this game. The high of the year, $55. The low of the year, $25. That is a 50% drop. If you are not ready for a 50% drop, you should not be playing this game. Because that's what stocks do. High, low. Okay, now if I bought it up there, I still wouldn't be selling it. I'd still hold on to it. Because the funny thing is, if I buy 1,000 shares at 55, okay, and you buy 1,000 shares at 25, we're both getting the exact same dividend. If the dividend's $1, well, I'm getting $1,000. If the dividend's $1, you're getting $1,000. Okay, you own 1,000 shares, $1 per dividend. Okay, that's $1,000. Even though I paid 55 for it and you paid 25 for it, we're both getting the exact same amount of money because we both own the exact same amount of shares. Now, do I really care? No, I don't, because I have no intention whatsoever as selling below what I paid for it. Because rule number 2, it just doesn't make sense. Because if you paid attention to rule number 1, never buy something you don't want to hold on to for the rest of your life, then you should know stocks can and do that. And that is a 50% drop. But that's over the year. Okay, so I'm a weekly trader. Buy on Mondays, I sell on Fridays. Ideally. Does it work all the time? No. But it works most of the time. And most of the time, works for me. Because if my average is 1.4%. Now my goal, I'm looking for 1%. But this year, my average has been 1.4% every single week. Okay, now we're into July. We're already past the 6-month period. Half the year's already gone. And I've averaged over 1.4% every single week. Even when the stocks dropped in April, I was still bringing in money. So as the stock values are going down, I'm still getting more than 1% of the account value. So if my account is 100,000 and the stock is dropping, I'm still getting $1,000 a week, even as the stocks are dropping. Well, it's not that difficult if you understand the concepts. Okay, number one, never buy stock you don't want to hold. Make sure it's a good company. Make sure it's one of those companies you feel good about putting your money into it, regardless what it does. 2 criteria. For me, you got to figure out your own. You can use mine if you want, but don't say I told you to. I'm not telling you to do anything. Well, I might tell you to do your own research. Never blindly listen to some idiot online. You can say whatever you want. Either it makes sense or it doesn't. Do your homework, don't do your homework. It's totally up to you. We're all here for a certain reason, for a certain outlook. We're all looking to get some type of return on our money. Okay, now what I'm doing is a very small niche. Okay, not a lot of people know about this, not a lot of people do it. Not a lot of people care about it because it's very slow, it's very boring, it's very monotonous, it's very tedious. It's the same thing over and over and over and over again. But you know what else happens over and over and over again? I consistently make 1% over and over and over again. Boring, but it is consistent and it is profitable. That's the only reason I do it. And it only takes me 5 to 10 minutes every day. So 5 to 10 minutes, I get to do whatever I want the rest of the day. All right, next. Oh, wait a minute. We didn't finish looking at Dow. Okay. High of the year, 55.81. The low of the year, 24.30. Okay. Look at the last 3 months, last 90 days. High, low, where was it? Where is it? Look at this. Down, sideways, down. Now, I love it when it hits the bottom, especially when it looks like this. Look at this. Doesn't that look beautiful? Down, up, down, up, down. Where do you think it's going next? Now, hypothetically, she should be going up. Thursday is the bottom. Friday, she opened lower, but closed higher. So Friday was a higher day. Thursday was the 30-day low, 30-day bottom. Friday was higher. That's 1 day to the upside. So if tomorrow is another day to the upside, I might just jump into it again anyway, only because I love gap downs. They always have a tendency to fill. Okay, with the volume quadrupling or quintupling. Okay, that's always a good sign. And the movement. Look at the movement from there down to there. And then look at Friday. Well, the opposite happened. We still had almost double or triple volume and a nice movement. Okay, so yeah, if she's higher tomorrow, I might jump into Dow because everything looks favorable. And it's Dow. Dow's been around for over 100 years. Do you think they're going to disappear overnight? No, because what's the first thing that happens? First thing that happens on a company that's in trouble, they start cutting the dividends. And as soon as they start cutting the dividends, guess what? They're off the Dividend Kings list. They're off the Dividend Contenders list. They're off the Champions and the Aristocrats list. Well, then if they're off that list, I take them off my calendar and I don't look at them anymore. If it's not on my calendar, if it's not on that list, it's a no. There's over 10,000 different companies. So no. But more than likely, if she opens up higher, I'm jumping into Dow. Let's see one on Dow. See what you think. Tell me what you think. Right there, and 25.50 right there. Buy one covered call, Dow 100, that's the weekly, 1 August 25, that's next Friday. The 250 call option against Dow at the market to open. Well, the stock is at 25.51. Well, if I'm buying it at 25.51 and selling it at 25.50, think about it. I'm losing a penny, but I'm collecting $53 per contract. So let's see what those numbers look like. Okay, right there. Let's get this there. $53 divided by 24.97. Wow, that's cheap. 2.1%. I got to write that one down. Dow, 2.1%. All right, Dow's written down. If, of course, you like Dow. If you believe that that's a good investment for you. Okay, don't listen to me. What the hell do I know? Ask yourself the question, is this a company I feel safe putting my money into? How consistently profitable are they? Do they have weekly options? Does it make sense? These are all good questions. So let's take a look at some more questions. We got a whole bunch. So I'm going to grab a seat and I'm going to answer some of these questions as best I can. Get a little comfortable. All right, what we have here. Okay, Philip thinks he's funny. ULTY hasn't been around 20 years. That's a no. Robert John McKeon, DX. What the hell is DX? Get back to where we were. DX. What is DX? DX. Dynex Cap REIT. No. So, Robert John McKeon, you weren't here earlier, I'm assuming. Do you see this right up over here? Where it says 15 August, 19 September, 19 December. Those are months of the year. I don't do months of the year. They just don't work for me. Philip Johnson, Square D. I have no idea what that means. Sniper Salon, ULTY, Hui. Yep. Sniper Bits, Cool Beans, Real Big Hits. Alrighty. Joel, how are you? Okay, Philip Johnson, you got to tell me what the ticker symbol is for Square D, even though I know it's going to be a no. All right. Less coffee. Believe it or not, I don't drink coffee. Cat Curio. Okay, Philip Johnson, Square D. Again, I'm going to tell you, I never heard of them, so I don't know what this ticker symbol is. Any advice on VLCN? VLCN. Hell no. That's my advice. That's for me. That's not for you. You like it, you do it. To me, hell no. Tank monthly, absolutely. Joel Levi, capital gains versus cash flow. Absolutely. I like cash flow. B-Rad Daddy, Intel or Dow? Well, B-Rad Daddy, I actually own both of them already, but Intel for this week, ooh, same thing. Now, I do own some Intel, but look what's going on here last 30 days. Bottom, shoots up, pulls back. Shoots up, pulls back. Shoots up, big back. Okay, look at the volume. That big drop, big volume, it's Intel. Yeah. Now, if she opens up higher tomorrow, I'm jumping in only because I love a big drop with quadrupled volume. Okay, and usually that's because of earnings. Now, Intel, it's a chip maker. They ain't going anywhere anytime soon, not this time. Okay, so yeah, so what does that look like? 2070? Maybe the 21. The 21's going for 30. That's about 1.5%. Take a look at the numbers. Okay, right now it's at 2070. The closest one's going to be the 21, and that's going for 30 cents. That's a 1.5. B-Rad. Next, AZO. Lake Run, what the hell, AZO? Oh, AutoZone. Oh, hell no. Aren't they like astronomically high? No, for two reasons. AZO, who came up with that one? Yeah, Lake Run. No. Number one, I don't do monthly options. The numbers just don't work. And number two, I don't do stocks over 250 bucks. Sorry. Heidi, good evening. Will, too, good evening to you, too. Cruiser, good evening. Yahya, I'm up 300% on XRP. Should I sell? I can't give you any advice. I have no idea who you are. No, I got that one. TNA. What do I think about TNA? Now, I'm going to make the assumption that TNA is a stock and not what the first thing that comes to my mind. And for those of you sick bastards just like me, you probably got the same thing coming to your mind. TNA. Directional daily small cap. Well, your 30-day high was Wednesday. Thursday and Friday started to pull back. Okay, your bottom here, she shoots up. Now she's starting to come back down again. So, know that. Now, Joel, SCHD. I don't like SCHD. SCHD. Okay? Here's your bottom here. There's your top there. Okay? Now, the reason I don't like SCHD is because they're not consistently profitable. Now, I always tell anybody, if you're investing in stocks, SCHD, you should have at your little fingertips access to a financial website. I like Yahoo Finance. You can choose whatever you want. Russ, what do I think of vertical spreads? They're great when they work. Quantum Antenna wants to take a look at Riley. Hold tight for a bit. Okay, so this is Yahoo Finance. I'll tell you what I want to look at. I want to look at historical data. But before I look at historical data, this here is the summary. So let's see how the summary looks for SCHD. Now, if I'm looking for 1% a week, okay, 1% per week, we are more than halfway through the year, which means we are in week number 30, 31, something like that, okay? So that means I should be up at least 30% by now, because 1% a week, we're in week 30, that should be up 30%. Well, look where SCHD is. 3.8% for the year. That's 3.8%. Now, how could you possibly think 3.8% yield is a good thing? But here's the year-to-date daily total return, 1.9%. So what makes you think, Joe Delb, what makes you think 1.9% for this year is a good place to invest your money with SCHD? Well, I don't like it. And there's a reason why I don't like it. Okay, let's go to historical data. Okay, now historical data, right over here, is going to tell me how has this thing performed over the last 20 years. Well, because that's what I'm looking for. Companies that are consistently profitable. Now, I don't play the hype game, which apparently if you're doing SCHD, you do. So I'd like to think that somebody, rammed this thing down your throat and say, hey, buy this piece of crap. Let's take a look at the numbers, okay? Because I'm a numbers guy. 1 + 1 is going to equal 2 no matter what galaxy you come from. So if a company is consistently profitable, the profits should be higher and higher and higher and higher over the last 2 decades, last 20 years. Well, 20 years ago was 2005. All right, so let's go back to 2005. Wait a second, hold on. This only goes to 2011. Well, that's only 14 years. You got another 6 years to go to be profitable consistently. But let's take a look at the last 16 years, okay? All right. 4 cents, 4.6, 6.8, 6.9, 8.6, 6. Wait a second. Hold on. Time out. Now, when I say consistently profitable, I have to admit, I did not go to college. In what world is 6.6 higher than 8.6? Other than the fact that it's higher on the screen, okay? Because if you think of it in context, 6.6 is higher than 8.8, higher on the screen, but not higher in dollar value. If I'm getting 8.6 one week, and the next week I'm getting 6.6, that's what, that's 2.2 decrease, 2.2 on an 8.6, that's 25% decrease. 25% decrease. That's not consistent profitability, but that's only one. Hold on. It actually gets worse. Because believe it or not, I've done this before, and I know that I don't like SCHD for this reason. So here's 6.6. 7.5, 7.7, 8.3, 8.2. That's down, but not a huge amount. 8.9, 8.4, down again. 9.1, 9, down again. Not huge, but still down. 10, 9.9, down again. 9.0, down again. 9.9, 10. It goes from 10 to 8.1. Well, that's down 20%. That's a 20% drop. 13, 10, that's down, what? $3. All right, 3 on 10 is 30%. Okay, 11, 14, 11, 8, down again. From 11 to 8, that's down $3. $3 on 11 is 25%. Another 25% drop. Okay, 8, 13, 12, down again. 13, 11, down again. 14, 16, 15, down again. 14, down again. 18, 20, 16, down again. Do you see what I'm saying? Up, down, up, down, up, down. No consistency of profitability. And it's not even 20 years old. Doesn't even make it on my list for another 6 years. But it's not going to make it on my list at all because they're not consistently profitable. Terribly sorry. I don't like SCHD. That's it. And that's all. Let's keep on going. Okay. What do we have next? Dirt farmer, home on the range. Casserole. Didn't we already look at TNA? We did. Can we look at stocks? Hollywood, we've been looking at stocks. 8 Curlo. Gina Lee, you are talking more about yourself than what you should be sharing. Okay, Gina Lee, if you want to chime in and tell me what it is you want to hear, I got no problem with that. Intel this week. Alexander, we already looked at Intel a little while ago. Ronnie Mack. Dina, hope you had a great weekend. Did you roll any of your positions on Friday? Yes, I did. SoFi for beginners. Okay, Tyler, same thing. SoFi. SOFI. SoFi, the same thing. They haven't been around long enough and they're not consistently profitable. Okay? SoFi Technologies. There are no dividends in the selected time period. So, Tyler Ray, if it has no dividends, why am I looking at it? American Lefty, figure to the left, give up something stupid like that. Right, Dow, Intel. Oh, I get 15 more questions. 285, sorry. Okay, 22. Okay, I got puts. Steve, Applied Material, AMAT. Well, let's take a look at AMAT. I like Applied Material. AMAT. Ouch. Ouch. Who came up with Applied Material? Who was that? Eric. Applied Material. Did you say you got Applied Material at 197? 197's right there. What? Okay, Eric, you and I are going to have a conversation, dude. Unless you've had it before you were here, okay? You need to explain to me why you bought this at 197. Look at that run up. Anyway, 14 more. Dow, we already did. Owl, we already did. Intel. Who's that? Eric. Looking to see best way to move forward without selling at a loss. Ooh, will Apple beat Tuesday's earning? Ooh, let's take a look at Apple. AAPL. All right, now, here's Apple. High, low, where was it? Where is it? Look at the motion. Up, down, up. Okay, simple. It's at 213. What's the closest to 213? 212.50. Well, that's going for 5 1/4. Well, yeah, it sounds good. More than 2%. Why not? Now, I do have some Apple, but I got Apple at 205. Yeah, don't be all smiling about it. It ain't that good. All right, a year ago, Apple's at 217. High of the year was in December, 260. Low of the year, 168. That's almost $100 drop. If you don't have the stomach for that, you shouldn't be playing this game. Is the company profitable? Yeah. They keep increasing their dividends? Yeah. Is it on my list? No. Do you know why it's not on my list? Because it doesn't have 20 years of increased profits. But do you know why I bought it? Because it's on Warren Buffett's list. So that's why I bought it. Now I bought it in the 205 area, which was a couple of weeks ago, right around here. Then she jumped up. Well, don't get all excited because when I got it at 205, now I made a nice couple of chunks of change on it, okay, in the 205 area, right around here. Okay, but then she dropped down to here, 196, and I sold somebody the rights to buy it from me at 200. So I am now stuck at the $200 strike price. So one of the drawbacks of covered calls is if you ever sell below what you paid for it. I paid 205 and I sold the 200s because the stock dropped down to 196 and it looked like it was keep on going. Okay, so she turned around and started going up, and I didn't get out. So I still own it at 205, and I sold somebody the rights to buy it from me at 200. So I have to roll the 200 every week. And what do I mean by rolling? Well, you got to buy one back and sell the other and hope that the difference is a profit. Well, it is, but it's not as big of a profit as I would like. And I refuse to take a loss. Remember, rule number 2, never sell a loss. So I refuse to sell a loss. So the question is, do I think it will beat the earnings this week? I honestly don't care. Because I like the stock. I will continue holding on to it. I'm kind of hoping that it doesn't. I'm kind of hoping that it drops back down below 200 so I can get out of that $200 call option and sell one higher up to where I bought it for. Okay? That's what I'm looking for. So I don't know if it's going to hit it or not. I don't really pay too much attention to that. But we'll keep our eye on it. Are you guys seeing the big screen on YouTube? Okay, just here, Steve. KG, what's happening? Eric, SLB 3567 premium, 36 is 31. It's a no. Yeah, but at 3567, I'd be doing the 3550s or the 36s. What is SLB? SLB. Wasn't SLB like, it's at 35.47 right now. So I'd be doing the 35.50s right there, and that's at 53 cents. Why would I do the 36s? 36 is too far away. Who is that? Eric. Okay, Eric, look where we are at the moment. Okay, SLB is right here, 35.47 at this moment in time. Well, the closest strike price to 35.47 is going to be the 35.50, and it's going for 53. So if you're looking at this price here, well, that's the bid and ask price, but that's going to change come Monday morning. But the math doesn't change. So when it opens up Monday morning, you got to take a look at this price, and then you divide it by that, whichever one of these is closer. And if it gives you more than 1% and you're okay with it and you like Schlumberger, well then yes. But you're on the list for tomorrow, so we'll take a look at it tomorrow morning. I'm not sure if I even have Schlumberger or not. Anyway, let's keep on going. What else do we got? Yeah, 35.50 is 53. Yeah, he's right. 36.31 is a no. Add 33, you're gonna, that's 64. Yep. Who said that one? Steve, KG. Yep, Steve's right. Eric. What's the best time to sell IBM calls if it runs up tomorrow? Okay, Eric. Okay, now you've been here long enough, Eric. You should know that it's always a numbers game. Okay, you can sit there in front of your computer all day long and watch those tickers go up and down, but eventually you're going to have to just say, you know, that's good enough and hit that button. Because no matter what happens, you're going to hit the button. Half the time it's going to be higher, half the time it's going to be lower. Half the time you're going to say, oh, I wish I waited longer, and half the time say, oh, I'm glad I got it when I did. Take the money, say thank you very much, and move on to the next one. Okay, you're never going to hit the high. Well, I shouldn't say that. Hardly ever will you hit the high, and hardly ever will you buy the low. It just hardly ever happens. J Spice, should I hold these in an IRA for tax purposes? J Spice, how are you today? You're new here. Never heard that name before, and I'm pretty good at names. Manhole cover. That's a cool name, brother. So in an IRA, it's always going to depend on what your tax strategist tells you. Not a tax accountant, not a bookkeeper, a tax strategist or a tax planner. You got to weigh all the pros and cons of all the aspects in life. Okay, if you seriously want to be an investor who doesn't pay taxes, you're going to have to get with a tax advisor or a tax strategist. Say, how can I set up my money, my retirement, so I don't have to pay taxes, or legally pay the least amount? Legally pay the least amount. A tax strategist will help you out with that. In an IRA, yeah, a Roth is probably the best bet, but if you're over the age of, I'd say, 40 or 50, you know that just because it says tax exempt until you retire, until you take the money out, well, eventually they're going to find a way to screw you out of it. It's just the government. All right, what else we get out here? Watch out, Merck. Early earnings. Yep, got that one. Recommend avoiding earnings. That's why the premium is juicy. Yep, Steve is right. I try to stay away from earnings on certain stocks. What's the best time to sell IBM calls if it runs up tomorrow? Tomorrow morning. Dow cut the dividend. Yes, I'm aware of that. Yep, it lost its dividend status. Will that be dropped from your list? I'm not 100% sure if it will be dropped from my list. I mean, to drop Dow, it's over a 100-year-old company, and they've had a very long run of increased dividends. I'm going to have to really take a good look as to why did they cut their dividends. Okay, if it's a good enough reason, I might let it stay. But if it's a reason where where it usually is, where the CEOs and the board of directors are greedy and they want raises while they cut profits, yeah, in that case, I'll probably cut it off the list. Applied Materials, Eric, we looked at Applied Materials. Oh, that's it on that list. Okay. Over here, Little Ethan, I subscribed. Okay, Little Ethan, I'm not quite sure what it is you want me to tell you, but Bloodhound, good evening, how are you? All right, let's keep on keeping on. Swing Sensei, call option. Not quite sure what you mean by that. Okay, USA Farm Style Life, sell puts. Now, I'm going to agree with you to a certain point, Farm Style Lives. You're talking about a cash secured put. It's basically the exact same contextually as a covered call. Meaning, you're taking a big chunk of money, you're setting it aside, and you're getting a rate of return on it. Buy a stock, sell the option, you get a rate of return. Okay, sell a put, well, you got to put some cash up in order to be able to sell a put. It's called a cash secured put. You can do it, and you get a rate of return. Okay, there's no way of getting a rate of return without putting something up. Unless, of course, you have enough money in your account and you've been doing it long enough and you've actually reached that status of the ability to sell naked calls and naked puts, which a lot of people don't have that ability to do that. And it's not a wise thing to do, unless, of course, you really know what you're doing. Ed, Gabe, Eric, Dolph, Caver, and Defend projections for the year. Well, Dolph, let me see if I can help you out for a second. CAVA. Well, let's see what kind of dividends CAVA actually has. Carver Group. Oh, look at that. No dividends at all. No, thank you. So what was the other one? Defend. DFEN. DFEN. Direxion Daily Aerospace. Oh, they actually have dividends. So let's see how many dividends these guys have. 2017. What? 17, 18, 19, 20, 20. Okay, wait a second. 2017 to 2025, that's only 8 years. Okay. Oh, this is not good. This is not good at all. Now, Dolph, you're relatively new here. Now, Dolph, when I say I only like companies that are consistently profitable, what do I mean by that? Well, at the end of every year, the corporation is required to have corporate filings, which means tells everybody how much did they make. Well, let's take a look. 2017, 0.63. Okay. 0.019. No, 0.019, yeah. That's like 2 cents. Okay, then it goes to 10, to 13, to 7, to 6, to 4. Explain to me how that's good. Okay, go from 10 to 13. Well, that's good. That's a 30% increase. But from 13 to 7, that's 45% decrease. 10% increase, 45% decrease, and then another decrease, and then another decrease. Then it went up to 15, and then it went down to, yeah, no. Sorry, dude. That is not what I call consistently profitable at all. Mersad, 1.5%. What is that? You look like Tony Hawk. Thank you. It's not the first time I've heard it, but all right. What's the YouTube channel? Don, the YouTube channel, if you come up right to the top left, where it says Dividend Stock Talk, and there's a picture of me right there in the top left corner, yeah, that'll take you to the website, The 10MinuteTrader, which is basically the same as the website on YouTube, The 10MinuteTrader. Antonio, how you doing? Lisa Stevens, how are you? Nick, good evening. Ellie, good evening. Sin, good evening. Make money from your Wi-Fi. Ooh, I remember that. I still have my $50 Palantir call option that expires January 2026. Okay. I don't do Palantir because it's not consistently profitable. I've seen the numbers, don't like it. I knew it was the right leap. All righty. Which company is he reviewing? Oh, that was DFAN at the moment. Let's get out of that one. Okay. Schlumberger up. Jastia, holy cow, 100 more questions. Eric Schlumberger, we looked at that one. But good future. Okay, Kenny, I don't really look at the future because I'm retired, which means if I can't make money on it now, it's automatic no. Okay? I on average get 2% weekly. Okay, color, good for you. Jeremy. Momo, what's happening? Chasing Jack, hey James, hope you're feeling better. Much better. Not 100%. Lake Run, yeah, no. You said 10 contracts, that's 1,000 share equivalent, therefore binding 30,000. Okay, Gamma, I appreciate the input. Company goes bankrupt, 30,000 away, keep the premium. Okay, Gamma, companies don't go bankrupt if they're increasing their dividends. The first thing that goes, always, 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 is the dividends. So as soon as the dividend goes away, yeah, then you bail on the company. Terribly sorry. You got a point, though. Companies do go bankrupt. But I really don't see Coca-Cola, Ford, General Motors, IBM, AT&T, Bank of America, Wells Fargo, those companies. I don't see those going bankrupt. They've been in business for over 100 years. Okay? I understand your concern. I would be concerned, too. Let's keep on keeping on. What did you do with Kohl's? Okay, Mortgage Magician. I actually still own Kohl's. Uh-oh. Willie, too. What delta? There's always someone in the crowd asking me about the Greeks. Always, always, always. Now, let's take a gander at Kohl's. Okay? Here's the high a year ago. Here's the low back in April. Okay? Here's where we were, 22, Now we're at 1279, but look at the motion. Sideways, down, up, and then to the roof. Okay, well, what happened? Well, Hollywood rolled his. Well, I rolled mine too. But here's the thing. When you get a big jump like this, okay, that is a huge jump. Anytime you have big, huge movements, there's usually the opposite following. Okay, big gap up, huge amount of volume, shoots way up, gets a little over 21. Very next day, we're back down to 12. What happened? People took profits. Okay, Willie 2, what delta? Now, Willie, if you want, we could have a nice conversation. And I'm kind of curious, is how are you going to explain the Greeks? Okay, because when you're going to teach someone about the delta, you got to teach them about the theta, and you got to teach them about the rho, and you got to teach them about the vega. You can't just do one and leave the other ones out. So I'm kind of curious, how do you teach a 9-year-old about what the delta means and its effect on the stock, and whether or not she should be buying or selling depending on where the delta is? So Willie, what I have to say to that is adults have a tendency to make this more complicated than it needs to be. The trading strategy I'm showing and I'm explaining was created for a 9-year-old. Okay, a 9-year-old can say, hey, there's the high, here's the low. Ooh, this is the way it's going. Sideways, up, back down, sideways again. What's the current number? Well, the current number's right there. What am I buying it for? That price right there. What am I selling? That price right there. Is that more than 1%? 9-year-old can understand that. Okay? Delta, theta, vega. Why don't we just throw in the, what do you call it? The Black-Scholes pricing methodologies for standardized method. Black-Scholes pricing methodology for standardized options. Why don't we just throw that in there too? If you think a 9-year-old can understand what a delta is and everything that goes along with it, and to keep it fun, exciting, in less than 10 minutes, you're a better teacher than I am. Okay? I knew who my daughter was. I knew what her limitations were. And delta, vega, theta, yeah, no. All right, let's keep on keeping on. I am legend. Okay, I am legend. Says, sir, please advise on ADM. Advanced, wait a minute, Archer Daniel Midland. Ooh. ADM. Another dividend king. Check that out. Easy to see. High, low is look at the motion. Down, up. That's it. Down, up. That's all it did. It's currently at 55.35. Glasses. I don't feel like getting up. So the 55s are going for 90. That's good. But I lose 53 cents. That's not good. If I did the 56s, I'm only bringing 45. Yeah, the numbers just aren't working. Sorry. Take a look. They're just not working. Okay, so if I do, it's at 55.35. So I got two choices. I do the 55, which is a safer trade, or do the 56s. A little bit more profit, but stock has to perform. Okay? But neither one of them are giving you 1%. So I'm going to say no to Archer Daniel Midland this week. Kim Wasabi. Cool. Cade 43. 86. Good evening, dude. How are you? Holy cow. 99 questions still. Is he reading the questions? Okay, Willie too? No, I'm not reading these questions. Hollywood. What's good, bro? Yep. If Coles goes 10x, there is nothing to roll. You'll be crushed. Gamma, I'm not 100% sure what you mean by that. Now, I've been trading for a very long time. If you think Coles goes 10x, well, all right, let's see if I can explain this to you in a manner, because I kind of get what you're saying, but not quite 100%. Now, I'm assuming 10x means it's going to go up 10 times. So right now, it's at 1279. So 10x would be 127. That'd be 10x. Okay, so could it go from 1279 to 127? Yeah, it could. But guess what? Here's the thing. Now, I need you to pay attention closely because by some of your input, some of your questions, I think you might be in the wrong place. Okay? Because what you're saying is if Coles goes 10x, there'll be nothing to roll, you'll be crushed. No, I won't. Because here's the thing. I bought Coles down in the series somewhere. Okay? Now, I already sold somebody the right to buy it from me. Okay? I think it's next week, the week after. Hold on a second. Let me just pull it up and see exactly where it is. Coles, not there. Not there. Don't tell me I got rid of all my Coles. I did. I got rid of all my Coles. Holy cow. Well, I got rid of all my Coles. All right, anyway, so here's the thing. Let's say, hypothetically, I buy it tomorrow at $12.79. Okay, so if I buy it at $12.79 tomorrow, I will sell somebody the right to buy it from me at 13. Okay, so that means at 13 I will get 60 cents a share. Now, 60 cents a share on a $13 stock. Well, that's over. Oh my shit, 13 into 60, 5%. Okay, now let's say you are right. Okay, let's say I do this tomorrow, $12.79, and I sell the 13. I pick up 5%. Now let's say on Tuesday it shoots up to 127, just like you're talking about, 10x. Okay, great. Well, whoever bought the option from me is going to get that money. What am I getting? I'm getting 5%. Well, I already won. My goal is 1% a week. Do I honestly care if the stock jumps up? Listen closely, because you're not quite understanding this. Okay, listen very closely. I honestly do not care if the stock jumps up 10x. I don't care if it goes up $5. I don't care if it goes up $20. I don't care if it goes up $100. I honestly don't care. My one concern and only concern, well, I get two, sorry. I get two concerns. Number one, consistency of profitability. Number two, preservation of my capital. Okay? Profits, preservation of capital. If I buy it at $12.79, I sell somebody the rights to buy it from me at 13, I'm collecting 60 cents a share. That's over 5%. I've made my goal. I'm looking for 1%, it's offering me 5. Do I care if it jumps up? No, I honestly don't. I don't. If you care if the stock jumps up and you're missing out, this isn't for you then. It's actually that simple. If you're looking for capital appreciation, if you're looking to buy a stock and have it shoot up, you're in the wrong place. I'm not looking for capital appreciation. I'm looking for consistency of cash flow. That's it. Okay? Gamma, hope you understand that. Let's keep on going. Wow, I still got a whole bunch of questions. Let's keep going. Hollywood loves SLB. Good. Gamma made 5% on the roll this week. I'm glad you're doing good, Hollywood. Yield Max, same thing. Yield Max has not been around for 20 years. You must pay a lot of capital gains. Dark Moon, listen closely. If you enjoy paying capital gains, that's a you thing. Me, I don't like paying them. I don't pay them. Okay, if you actually read that code book, any payment you make to the IRS, it's actually in the code book. It is. Any payment you make to the IRS is considered as a gift. Look it up. Seriously, it's in that book. You make a payment to the IRS, it is considered as a gift. And also, voluntary compliance, that's in that book also. Okay? So, anyway, what you do, SalIEarnFun.com. Cool beans, Sal. How are you today? Scott, Ford. Well, we haven't looked at Ford in a while. Let's take a look at Ford. Oh, by the way, I don't know if I have Coles anymore. I had it in almost every single account until it just went through the roof. I was like, yeah, take it. Take it away. Made my money off of it. Ford. High, low, is. Look at the motion. Sideways, down, up. Okay, so it's 1147. Okay, the 1150 would be the closest one. The 1150 at this moment in time is at 37. 37 for the 1150. That's over 3% if you like Ford. Okay, I'm not going to do any more because we're past 11, which is I'm already past my bedtime. Okay, so I'm going to just go through the rest of the questions and we're not going to look at anything else. What you do, Sal, I'm not quite sure what you mean by that. B-Rad Daddy, sorry if I missed it. James, did you do Dow and Intel? Yes, I did both of them already. AT&T or Verizon, ooh. Why would you lose that much if it's predictable and safe? Okay, Mindy, I'm not 100% sure why I would lose because I'm not quite sure when you actually post. See, Mindy, I'm going to apologize because I don't know when you asked that question and I don't know what the topic of conversation was when you asked that. So if you ask that question again and I'm going through it, I hopefully understand it. Scott, we looked at Ford. Willie too, I don't do Delta. AVGO is usually solid, not necessarily so. Brian, do you look for mostly call options? What is the best time duration to look for? Do I ever have to, whatever. Brian, I do covered calls. I don't buy options. 80% of all options expire worthless. I do not want to be a buyer. I want to be a seller. My call options. Brian, I have no idea what, sell my call options. I don't buy call options. I sell them. All right. SBET bullish, live in paradise. How are you doing in paradise? SBET, what the heck is SBET? SBET, hell no. Do you share the 400 company names? Yes, I do. And Marty Booty's Beauty and Finance. Ann's Mart Beauty and Finance. And that sounds interesting. Why don't you DM me your number? We'll give a call and we can check. I'm kind of curious what you do. The Chris Show. Ooh, the Chris Show. Cool beans. Figma. All right, I'm not quite sure what Figma means, but all right. And Shed the Life, thank you. Let's look at more stocks, please. Oh, yeah, I hit the wrong button. Got stuck with a stock for a year, but ended up with a $5,000 year later. Okay, nothing wrong with that. Can we please check out APA, Apache? Interesting. High, low. Where was it? Where is it? Look at the motion. Down, up. And it's at 1910. Well, what's happening at 1910? Well, the 19 is going for 46. The 1950 is going for 24. Both of those are over 1%, if you like Apache. Well, look at the last 30 days. Okay. Bottom, top, drops. Now she's going back up again. Well, what's happening here? What happened on Friday? Okay, see, the bottom was 2 weeks ago. She went up, pulled back. That's Tuesday, Wednesday, Thursday, Friday, pulled back a little bit. Well, is Friday an anomaly, or is she going to go back up on Monday? So if she goes up on Monday, then that'd be good to jump back in again. And the 19s are, well, they're going for a relatively good amount in the 1950s. All right, Ray, I've been banking off ULTY. Well, I don't like ULTY. They haven't been around long enough. I don't like companies that don't have enough longevity to them. Captain Hindsight. BP. You said Halliburton. Yes, I did. B-Rad Daddy. All right, Gamma. Sir, your deep analysis, please. Up, down, up, down. Did you like that deep analysis? I mean, look. She went up. She came down. She went up. She came down. She went up. Looks like she's coming back down again. We have a lower high and a lower low. So, yeah, it's coming back down again. That's a deep analysis. Isn't that cool? Chasing Jack. You have done AA, Alcoa, APLD. No, I haven't done those yet. Chasing Jack, we can check those tomorrow. G-Man Money, what's happening? Gaspotro. TSYY. Do I have a course? Yeah. All right. What do we have? TMP. What the heck is TMP? AGNCRITM. Yeah. No. Okay. DMIN. Well, let's take a look at that tomorrow. What do I think about NUGT? Cosmic Bacon. What the heck is NUGT? Directional Golden Man. Okay. Yeah. Hell no. All right, NUGT. NUGT. Let's see, how often have they been profitable? How continuously have they increased? 17, come on. Come on. 2010. Oh, wait a second, hold on. 2011, 2018. Yeah, I'm going to say no. Look at the numbers. It goes from 32 to 17, 13, 25, 71, 24, 5, 8, 11, 32, 19. Hell no. Come on. What were you thinking? Sorry, Cosmic Bacon. James, TMP. What the heck is TMP? TMP. Tompkins Financial Corporation. '24, '23, 2019, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5. There you go, right there. Ooh, check this out. There could be a possibility here. Let's check this out. You ready? 2005. $8.51. I don't know. Should we ignore that one? Because that looks kind of awkward. 24.7, 24.7, 24.7, 24.7, 27, 29, 30, 34, 36, 38, 40, 42, 44, 45, 47, 48, 50, 52, 54, 57, 60, 61, 62. Ooh, nice. Well, the dividends are definitely there. Well, let's see. Does this thing have weekly options or monthly options? What number are we looking at? TMP. TMP. Ha ha ha. There you go. Hell no. Sorry, James. I don't do monthlies. I just don't do them. The numbers just don't work. You're tying up your... Okay, here's the thing. All right. Now, I admit I did not go to college. Okay? I admit that freely. I mean, don't get me wrong. I got invited to speak at MIT. That was cool. Okay? I've been to Harvard. That was cool. Okay? I've been to Bridgewater State. That was okay. Okay? I've been to a lot of colleges, but I never attended as a student. So here's the thing. I understand 15 August, 19 September, 19 December, 20 March. I understand that those are months of the year. That I understand. Heck, a third grader could tell you that. Also, I could tell you there's only 12 months in the year. So if I do an option trade, I can do it 12 times. That's it. 12 times. Now, if I'm averaging 1, 2, 3% each time I do it, the maximum I'm going to get is 12 to 24% a year. That doesn't work for me. I only like weekly options because 1 to 2% every week is 50% to 100% per year. Well, there's a huge difference between 24% a year and 100% a year. Now, I understand it's a little bit more work, but you know what? But here's another thing, okay? Another reason why I don't like monthlies. All right, you ready, James? This is another reason why I don't like monthlies. This is a 30-day chart. This is 30 days. Okay? 30 days ago today, TMP was at 63.50. Okay? She drops down to 62.50. Then she shoots up just below 68. She drops back down to 64. Shoots back up to 67. Drops back down to 62.50. Great. Now tell me, where's she going to be in 30 days? Seriously, where is it going to be in 30 days? This is a 30-day chart. A monthly option, which you can only trade once a month, you have to predict where is the stock going to be in 30 days. It's hard enough to figure out where it's going to be in 5 days. You now want me to figure out where it's going to be in 30 days, plus get less money. Well, let me show you. The next option is right here. Okay, let's slide this over. The current price is $64.25. The 65 is going for, oh, does that say $0? The numbers just don't work for me. I don't do monthlies because the numbers just don't work. Not to mention it's a pain in the ass trying to figure out where is it going to be in 30 days. I just don't do monthlies. They just don't work for me. So let's keep on going. Lords, that's crazy good. Okay, let's keep on doing this. Where are we? UPS, we'll take a look at it tomorrow. James, we all looked at that. Da Vinci Jerome says XRP will surpass ETH. Good for him. Do you have a course? Yes, I do. I sold a covered call contract in the money. Beginner mistake? Not necessarily so, because it always depends what you walked away with. I love God, TSYY. Okay. How do you calculate the strike? Caribbean Club, I honestly can't believe you asked me that question. Okay, let's take a look at this. Macy's, here we go. So here's Macy's right here. Now, Caribbean Club. I'm going to point out a few things and you tell me if it makes sense or not. Let's get rid of this. Let's get rid of that. Let's open this up a little bit more. All right, there we go. All right, so currently, Caribbean Club, at this moment in time, the stock price is $13.08. Okay, I love facts. I love numbers because numbers don't lie, facts don't lie. The current price, $13.08. So if I buy the stock at $13.08, what's the closest strike price? $13. $11.50, $12. $12.50, $13. $13.50, $14. $14.50, $50. You can pick whatever one you want. It is your right to pick any one of these that you feel works for you. But for me, I want simple, safe, quick, easy. If the stock is currently at $13.08, I want to do the 13s because I'm walking away with 37 cents. That's over 3%. Roughly. Okay, because you do have to understand all these numbers are going to change first thing in the morning. All right, so it's past 11:30. Well, it's getting close to 11:30. So we're going to call it a day. As soon as I finish up with these questions, you guys just keep hitting me with all these questions. Oh, don't. Rob, what? Rob 3001. What? Okay. Joey Levi, thank you for sharing your vlog for your family with me. You're welcome. Do you invest in bonds? Actually, I sell bonds. I do. We guarantee 20% on our bonds. This has been so helpful. Thank you, Sarah. Glad you like it. If it goes down, what do you do? Okay, user 75407733333933333666, whatever. Why couldn't your parents name you Peter or Ted, Oscar, or how about Bartholomew? Ooh, I'm going to call you Bartholomew. So what If it goes down significantly, what do you do? Well, it would depend on the situation. Okay, number one, what did I buy it for? Number two, what is the current trend? Number three, what caused the downturn? Number four, well, if they're consistently profitable, okay, I might just think about dollar cost averaging, which means buy some more if I can. Well, if I can't, I will lower my strike price and I'll sell a strike price at a lower price than what I bought it for. Because regardless of where I bought the stock and where the stock is at the moment, every position I have, I want to have some type of income coming in. Whether it's 1%, 2%, 3%, 0.5% or 0.25%, I really don't care as long as some money's coming in. Because if I have 8 positions, not all 8 positions are going to give me 1%. Now, 1 or 2 of them will give me 1, 2, or 3%. 1 or 2 of them might give me less than 1%. I'm looking for an overall average out of everything I own. So if I have 7 positions, okay, out of those 7 positions, I want to get 1%. Now, I might not get 1% out of Alcoa or Dow or Intel, but I might get it out of Siri and other ones. Okay? It's always going to be about the numbers. What did I buy it for? What's it at now? What strike price did I sell? What direction is the stock going? Is there anything I need to jump in to take a better look at? Because there's always questions. Yeah, I like it to be as simple as possible. Right? Down, up, what's going on next? Well, here's the high, hypothetically should be coming down. Hypothetically. And there's a gap right here. Well, gaps have a tendency to fill. Well, the gap is high. So normally it'll probably come down. Normally. Okay? But I'm not buying at here. I'm not buying at the high. I'm selling at high. I'm buying at the low. Mike Aces, what's happening? Uh-oh. I didn't get to Mike's question. He disappeared. Oh, there it is. MCVT about the pull HKD. I have no idea what that means. Cali girl, how are you today? Clement Tom, wish you a speedy recovery, James. You know what? My recovery has been very slow. I think I got sick last Tuesday or Wednesday. I think it was. And I've been basically in bed doing nothing. I get the privilege. Okay, now not everybody gets this. I get the privilege of laying in bed for 4 days just watching TV and recovering. Beacon, D-Min LC, all right. Max Glow, good evening. No nicknames, thank you. Six Dog, you ever prank a day trader by coming? Oh, that's funny. Bull, 40K profits taken this month. Well, alrighty for you. Bonds at 20%. I haven't heard you say that before. Tell me more. Brian, why don't you give me a call? Or why don't you DM me? And just let you know, Brian, okay, those 20% bonds, you actually have to come here and meet me face to face. I don't just sell them to anybody. Okay, Cohen, AAIO. What the heck is that? AAIO is the vowel. Too new and no dividends, but bull pays well, and I'm keeping it forever. Hey, Tadil, how are you today? Glad that you're here. But no, I don't. Okay, bull, apparently from what you're saying, it sounds like a long-term play, something you just buy and hold. Yeah, it's not something I want to do. Is there a strategy for selling losing positions? Yeah, I got a phone number of a couple people. You, whatever they're buying. No, I'm not going to do that. JHX, I have no idea what that means. Chasing. Thanks, James. I hope you have a profitable Monday. Oh, thank you there, Chasing Jack. Okay, your eyes tell me you're going to be dead soon. Thank you, Jay. But you do realize, Jay, that's in context. Because, see, the Earth has been here for millions of years. So even if I lasted to 113, okay, which is another 30, 40 years away, that's still pretty soon, depending on what you're comparing it to. As compared to the age of the Earth, yeah, I'm gonna be dead soon. Okay, if you want to take it, yeah. All right, why you so scam? You're so scam. Oh my goodness, Jay, thank you. Wonderful. How long have you? Oh my goodness. Oh, love having a troll. All right, where are we? All right, let's go over here. Russ, what do I think about vertical spreads? Love vertical spreads when they work. When they don't work, they're crappy. Oh, Mr. Wales is back again. Oh, I love Mr. Wales. MCVT going to explode on Monday till Wednesday. Thank you there, Mikey. SV Shane, James, what stock are you looking at? Macy's. Richard Bruner on the beach of Grenada. Holy cow. Nice going. Heidi, Harley Davidson. Oh, I like Harley Davidson. I had Harley Davidson for almost 11 months. HOG. Interesting. High, low, where was it? Where's it? Look at this. Sideways, down, up, sideways. 24.59 to 24.50s. They're going for 120. Holy cow. What does that look like? Ooh, nice. I got to write that one down for tomorrow. Okay. So I'm kind of curious what Mr. Will has to say. Evening, James. What do you think about coal spiking up last week? Hey, lovely. Somebody made money. Mr. Wales. No one makes 1% a week constantly. No one. Not Warren Buffett's, not even Nancy Pelosi. Okay. You're a grifter. If you make 1% a week, you'd be in a yacht somewhere. I just love it when people tell me how I should spend my money and what I should do with my life. Thank you, Mr. Wales. Very nice of you. But I tell you what, Mr. Wales, anytime you want to get on the phone, chat, we could do a Zoom call. I'll show you all my trades. And I'll show you all my trades over the last 2 or 3 years. Canadian TikTok. Hello, James. How are you doing? Your thoughts on Citigroup ticker? Ooh. Hey, Pedro. Hey, Mr. Wales. Pedro says hi. All right, so Canada TikTok, Talk Tick. Okay. Citigroup. What is Citigroup looking like? No. Think about it. Why? Okay. Why would you want Citigroup? A couple of months ago, it was down to 70. Now it's up to 98. And looks like Thursday was the high and Friday started the pullback. Why would you want to do that if they already started the pullback? Now, interesting thing, Mr. Wales. Grifters usually ask people to buy something or sell them money. Now, has anybody at all this evening asked me, have I asked anyone to buy anything from me this evening? No. Have I even mentioned any prices to anyone this evening? No. So if you don't have anything nice and productive to say, don't say anything. You're entitled to your opinion. You don't believe it, you don't need to be here. Okay? Coming here and just spewing negativity ain't going to help out anything. Pedro, Mr. James, you know all the people here love you. Thank you, Pedro. Muchas gracias, señor. Cool Arrow. We can take a look at MPW tomorrow. It's getting a little late. Without Tom and okay, whatever. Brian Cook, Alley. We can take a look at Alley tomorrow. Brian Cook, I have some Siri. I don't have any Alley though. Dennis. How are you, Dennis? TikTok Tommy. Yep, I got that one. Dow did cut its dividends by 50%. Brian Cook, Starbucks. We'll take a look at that tomorrow. Alex, hi. I am wondering if there are any up or down soon for SNI. It's a Canadian railway. Unfortunately, Alex, I don't do Canadian stocks. Unless they're traded on the U.S. stock market, I don't do them. SNI. SNI. It's not showing up, and it has no options. See it right there? Has no options. So that's going to be a no. Ooh. Princess Genie. How are you doing, Princess Genie? HP. What is HP? It's not HP. What is HP? It's not Hewlett Packard. Heimlich and Payne. Yeah, Heimlich and Payne. Yeah, no. Sorry, it's a monthly. I don't do monthlies. Because you met your goal and made the money you wanted. Makes sense. Like, not very many actually get that sense part. But it does make sense. I mean, think about it. If you have a goal, anything other than your goal is something that takes your eye off of your goal. That's just the way I look at it. Brian Cook, HOG, that's Harley Davidson. Okay, Allie, we already looked at YMAX stock. No. Riot, I actually have some Riot. We'll take a look at it tomorrow. If you're sick, you need to get some rest. Hope you feel better. Yeah, Princess Genie, I've been resting for the past 5 days. I'm sick of laying down. I'm sick of resting. I actually got to have an actual normal dinner tonight. But you know what? Gives me gas. Everything. Let's keep on going. AGNC. Allie, we'll take a look at it tomorrow. It's past 11:30. So you guys have a great night, and we will talk to you again tomorrow. All right? That's about it. If you share the 400 companies, where does one get the list? Hey, Slotomaniac, how are you doing? You're new here. I'm good with names, and I would recognize that name before. Princess Genie, you're welcome. Have a good day. Bert Peterson, parasites? Could be, but I'm taking oil of oregano, and that's supposed to kill parasites. Okay, so I've been on a diet that's basically non-gaseous food, all alkaline food for the past 2 days. It's supposed to get rid of the acid, all alkaline food, but no. Yeah, I'll have to figure out that one. So, Slotomaniac, yeah. Only the people in my morning trading group get a list of the stocks. But you can find them yourself. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There you go, right there. 5 lists right there. Easy to find, too. Just go to google.com, okay? And like Dividend Kings list, 2025. Dividend Aristocrats list, 2025. Champions, Contenders, Warren Buffett's list. Let's just add the 2025 to it, and then Google will give you the list. I feel like a lot of people have trouble with pattern recognition and reading statistics, then combining those skills to be usable in real life. Wow, I feel bad for that. But if you think about it, it's not that difficult. Okay, down, sideways, down, sideways. It's not that difficult. All right, that being said, catch you guys all tomorrow, and we will do this all again tomorrow night. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain I've lived